still do that, but the reason they stopped doing it is it stopped working. We started capturing those ships, we started sinking them. And so I think that this is going to be, to some extent, a game of attrition in the Strait, but there's just simply a limit to the Iranian capabilities, and there's virtually no limit to the American capabilities.
Let's just, while we have you, just talk quickly about China and what the main goals of the president trip is at this point. And you know, the naysayers say that China has all the cards, and you know, the usual suspects, the Guardian and others. But if you look at the underlying economic strength and industrial strength of China right now, she has major problems. And I know he has rare earth minerals. They've used that. What do you expect to happen there, and who has the upper hand in your view?
Well, I think the United States does, but it's a very delicate balance, Joe. I think the president very much wants to avoid conflict with China. We recently ran a major AI-based study of a conflict between the United States and China, and one of our key findings was at the top of any conflict, there's a 10% reduction in global GDP. That's a global recession, if not a depression. And that doesn't matter. It doesn't matter who wins, just at the beginning of the conflict. So avoiding conflict with China is critically important. That doesn't mean you surrender to China. As you said, they've got severe problems of their own. This crisis in the Gulf is hurting them very, very badly because they're so energy vulnerable. So I think that what the president can do is go in and say to Chairman Xi, you know, none of us want to see a major conflict. None of us want to take that kind of pain. How about you put pressure on your Iranian friends to wrap this up, agree to our demands, which are best for everyone, including China, to keep a nuclear weapon out of their hands, and get the oil flowing out of the Gulf again. And then he can make deals with China if he wants to for them to purchase our goods. That's fine with me. They can purchase American energy, American soybeans, all day long. I think we should be very, very careful about our sensitive technology, not give them any advantage going forward, but we don't have to do that to deal with them. So I think it's a very good thing the trip is happening. I think it's great when these leaders talk to each other to avoid that kind of conflict that I described.
We'll be talking about the T word, obviously Taiwan, and the journal's worried that she has set up a Venus flytrap pocket. Oh, that was interesting. That was scary.
It was scary.
Was that God?
It was YouTube.
It might have been our Chinese overlords.
Yeah, exactly. But apparently she is urging the president to formally oppose Taiwan independence as opposed to just not supporting it. Like these cement, and who knows what the words in Chinese would. It's hard enough to translate, you know, apples to apples when you're dealing with Chinese. But do you expect the president to acquiesce to some extent on Taiwan? That's what the journal's worried about, that to not have the decades of strategic ambivalence that have worked at this point for us.
Right. I mean, I think what we've done so far, which is we support the status quo. We don't support a dramatic statement of Taiwanese independence, and we're hoping for a peaceful resolution across the strait. That's what Taiwan wants. They also don't want a conflict. And I think if you maintain that strategic ambiguity, which is the formal phrase for it, and you support Taiwan, you know, I think that's plenty for China, and I don't think they should make any other demands in that front.
Ambiguity, not ambivalence. All right, Victoria, thank you. A lot on the plate, obviously, and it seems like there always is lately. It's a news cycle, but we appreciate your time this morning. Thanks.
Thank you.
It is 7 a.m. On the East Coast. You're watching Squawk Box right here on CNBC. I'm Ed Ross, working on this Monday morning along with Joe Kernan and Becky Quick. Among today's top stories, take a look at this. Oil prices, they are moving higher. This on the back of President Trump saying he has reviewed Iran's response to a U.S. peace plan and calls it, quote, totally unacceptable. Tehran demanding war reparations, an end to Israel strikes on its proxies in Lebanon, and total sovereignty over the Strait of Hormuz. You can see... Put that WTI crude there. You can see it's up about almost 3% now. 98.05. Brent back up again. $104. U.S. gas prices topping $4.50 a gallon. AAA saying the average price around the country is now $4.52. And Energy Secretary Chris Wright saying the government is open to temporarily suspending the federal gas tax. And one of the American passengers evacuated from the cruise ship that suffered an hantavirus outbreak has now tested positive, but is not showing any symptoms. That information coming to us from U.S. health officials. A French woman taken to Paris was also testing positive. Meantime, 17 American passengers were flown to Nebraska to be evaluated and see if they're at risk of spreading the virus as well. We're going to get the opportunity to talk all about this in just a little bit with former FDA Commissioner Dr. Scott Gottlieb, and we'll do that at 8:10 Eastern Time this morning. Meantime, take a look at futures, because despite the move higher on the back of oil, you're not seeing the equity markets move much lower, slightly lower. The Dow off about 44 points, NASDAQ down just about 13 points right now. The S&P 500 off about 8 points. I want to get straight over to Dom Chu. He's got a look at this morning's pre-market movers. Dom.
All right, so Andrew, Becky, Joe, we're going to pick up where you mentioned with the hantavirus, because Moderna shares right now are up by about 8.5% after a 12% gain on Friday. This is all related to the latest on the hantavirus and developments there. The drug maker said in a statement it has done early-stage vaccine research on the hantavirus. It said the research began before the recent outbreak on that cruise ship. Those shares are up about 140% over the course of the past year, but down 60% since its pandemic highs. So keep an eye on Moderna related to hantavirus and that cruise ship. Also right now, Intel shares are up another 6% pre-market after a gain of nearly 14% on Friday. This is on that Wall Street Journal report that it reached preliminary deals with Apple to make some of its chips. Apple previously has relied on Taiwan Semi to make all of those chips, and those gains for Intel are adding up to a pretty much historic 500+% gain over the course of the past year. Analysts at B of A this morning are raising their target price on Intel, saying that the Apple deal could represent a $35 to $40 billion opportunity for the chip maker. So Intel shares surging again by 5.5%. And then we'll go across the Pacific to Tokyo listed shares of Nintendo plunging by roughly 8.5% after the computer gaming console giant warned that sales of its Switch 2 product would fall this year. It comes after it said on Friday it's going to hike Switch 2 prices due to market conditions and rising memory costs. Nintendo competitor Sony also raised prices on its PlayStation 5 platform by up to $150 back in March. Those shares of Nintendo, by the way, are down about 40% over the course of the last 12 months. So, Andrew, a lot of movers here tied to news of the day. I'll send things over to you guys.
Okay, Dom, thank you for that. Appreciate it.
In the meantime, Federal Reserve Chair nominee Kevin Warsh has a few more hurdles this week in order to take over at the central bank. Emily Wilkins has more on the busy Senate voting calendar. Good morning. Good to see you, Emily.
Good morning, Becky. Well, look, Warsh, he's almost there. U.S. senators, they are gearing up to make sure that he is in place as Fed chair by May 15th. Of course, that's Powell's last day, but it is going to take a couple days and at least 4 different votes for him to get there. That's because senators, they're going to actually first need to vote Warsh onto the Fed board. Then they're going to need to vote him for Fed chair. So we're going to see the first procedural vote. It's actually expected this evening around 6 p.m. Then tomorrow, the Senate's going to take 2 votes, one to actually get Warsh on the Fed board, and then a procedural vote teeing up for him to be Fed chair. And then that final vote on Warsh as Fed chair could be as soon as Wednesday, but it might wind up dragging into Thursday. It all depends on how much time lawmakers want to use for debate. Now, Warsh only needs a simple majority here. That means he doesn't need a whole ton of Democratic support, which is great because it's not actually clear if any Democrats are going to be voting for him, aside from Senator John Fetterman, who has crossed the aisle to support several Republican nominees so far. Warsh's nomination was advanced by the Senate Banking Committee the other week, 13-11, the first time a Fed chair nominee has gotten through on a completely party line vote. Becky?
Emily, it sounds like a lot to get through all of those votes, but is this basically, assumed that this is a done deal at this point? I thought the difficult point was just getting out of committee, and if they did that, it was pretty clear sailing from there.
You're right, Becky. That's been the case. I mean, as soon as we saw Tillis lift his hold on Warsh, it was pretty clear that he was going to be able to get through. He's had a lot of support so far at this point in the process, and to be honest, most of the concerns that we've heard have been more about Fed independence and how the Trump administration has done things in regards to Powell, in regards to Lisa Cook, much less about Warsh and his particular policies. So it'll be very telling this afternoon, though, to see if any other Democrats join in addition to Fetterman, or if we might have a surprise Republican. But again, he only needs a simple majority. Republicans can more than give that to him, and so it's expected to be smooth sailing from here.
Yeah, basically a fait accompli. Emily, thank you very much.
All right, coming up, the S&P 500 on a 6-week winning streak. The average now sits right around 7,400. That's up more than 30% in a year. Now, market strategist Ed Yardeni is raising his target price for the index. We'll find out to where and when and why. All those things. Squawk Box will be right back. Welcome back to Squawk Box. Joining us now, Ed Yardeni, Yardeni Research President, frequent guest. We've been through a lot together, Ed, and I remember Liberation Day. Yeah. I needled you and said you briefly lost your nerve.
Briefly.
And then you went right back to what was your 2025 target?
7,000.
And you had gone down briefly, and then
Yeah.
it came back. This time you didn't waver. You didn't flinch.
This time, no.
Which, tariffs are one thing. Attacking Iran and
Well, you live and
creates
learn, I
some-
guess.
yeah, but $100, $110
Yeah,
Brent.
yeah.
A lot of reasons to maybe not stand firm, but you did, and I think were you at 77 for
7,700 and,
2026?
right now.
And you
I'm at,
stuck with that.
Now I'm at 8,000.
Manly. That was manly.
Yeah. Now,
Personally, I don't know. I'm not allowed to say manly. Anyway, it was manly. Now where are you going?
well, now I'm using 8,250. I've been bullish, but not bullish enough, as it turns out. The earnings estimates of analysts have been phenomenal. I've never seen anything like it. The first quarter earnings season we're finishing up now has turned out to be gangbusters. Not only that, but the analysts are actually raising their estimates for the second, third, and fourth quarters. And the year as a whole, they're talking about something like 23%, which is an extraordinary increase in an economy that's been growing all along. But I think the key to all this is, and I've been saying this for some time, that don't underestimate the resilience of the economy, the resilience of the consumer, and if that continues to be the case, then the same goes for earnings.
In the past, things have happened where, it wasn't the wrong move to underestimate the strength of
Yeah.
the consumer or the economy or businesses. You haven't explained to me. You say don't underestimate it. You haven't explained to me why. And you know what? I'm going to give you your answer for you. It's A, B, C, D, and E. It's E. It's all of the above. It's AI. It's the big beautiful bill. It's
The consumers, we've got a lot of retiring baby boomers, and
they're rich.
they're rich. They're $89 trillion in net worth, and a lot of them have paid off their mortgages. They're spending money.
Why are corporations doing so well?
Well, corporations' cash flow is at an all-time record
Why?
high. Corporate profits at an all-time record high.
You're not telling me why.
I think it's because the U.S. economy is strong, and not
Why?
only that, but the global economy is
Right.
strong.
I still want reasons. Because it doesn't
Well,
always.
yeah,
It's not always like that.
Yeah, I've been doing this for a while, and kind of one of the things I've learned over the years is we pay too much attention to Washington, and sometimes we don't really
So in
give
spite of Washington, not because of Washington.
that's exactly it. We've done remarkably well despite Washington, and I think the same thing can be said globally. More and more countries around the world that entrepreneurs, business people, consumers are just continuing to do what they want to do.
So if
which is to
Washington doesn't
prosper.
kill it, if Washington, you're saying in spite of, so if they're not actually going out of their way to
Right.
make it difficult for businesses, then the U.S. is going to flourish. And
Well, I think clearly we've got an administration that's deregulating, that's trying to stimulate the economy. I mean, the reality is, under Biden, a lot of money was spent to build infrastructure in manufacturing for semiconductors, and now under the current administration, we're seeing the same kind of push to, for if nothing else, for national security reasons, to bring the supply chains back to the United States. So it's all extremely stimulative. We also have the big beautiful bill, which is stimulative, not just for the consumers with tax refunds, but also with 100% depreciation.
right, 100% appreciation. When does input costs, because of $110 Brent oil, let's say that goes on, let's say it goes on for another 6
Right.
months.
Well, I think one of the things that's different between now and what happened in 2022, when we had a big spike in inflation and a big spike in energy, is we're not seeing a wage price spiral. Wage inflation really took off in 21, 22. Remember, there's a big shortage of labor. Now that's just not the case, and wage inflation's moderated quite a bit. I think the big story is productivity, and I've been talking about this being the roaring 2020s, and the similarities with the 1920s is tremendous technological innovation that led to enormous productivity. And productivity is fairy dust. It makes everything better. It makes growth better, inflation lower. It's great for corporate profits, and it actually boosts wages relative to prices.
Maybe that's the half-empty view of AI, is that people are just happy to have their jobs. They're not asking for
Well,
more money.
Yeah, I think AI on a net balance is going to be creating jobs.
Come on.
Instead of coders, we need prompters. I mean, we need people to actually monitor these systems. You can't just kind of leave them on their own.
But at this point, even though we're steady at 4.3% unemployment, you're not seeing a lot of hiring, and therefore can people ask for raises now?
I think there's already indications that the labor market is improving. We've seen the past two employment numbers have been very strong.
Why no wage price spiral though? That's what you're surprised.
Well, I think a big difference is the labor market is in equilibrium. Supply is equal to demand, so we're not seeing a lot of upward pressure or downward pressure.
Here's the question about jobs that I often think about. So the best example of, and we haven't talked about this, Joe, since I haven't seen you in a week. The best example I think right now about AI creating jobs in an industry that people thought that was going to lose jobs is actually radiologists around mammograms. I don't know if you followed this story, but everybody thought that mammograms were going to be read by computers, and radiologists were all going to lose their jobs.
Correct.
AI has helped make mammograms so much cheaper. More women happily are getting mammograms. As a result, they need more radiologists to actually look at this stuff and communicate back with the patient to explain what's going on. The question, though, that I have about that is that a short-term blip right now until we get to a point where you could use less radiologists to either communicate it, or
you get your original
communicate it, or what's going to
happen. AI does it, not
so in the moment, I get it, and I go, oh, that's an interesting example, because it's sort of completely antithetical to what people thought, but I don't know what that looks like long term.
Well, you know what's really odd is everybody knows that coders, software programmers are losing jobs, except for one anomaly here, and that is if you look at Indeed, job postings for software programmers is going up. So maybe there's some software programmers that you don't need anymore and others that you do need. I think a lot of people who are losing jobs, you're going to find them pretty rapidly. And we've seen in the latest employment report, the duration of unemployment is going down. Continuing claims, which we get every single week, has been coming down.
But
Gila Richardson, though, did say last week that the new jobs that are being added are not necessarily great jobs, that often they're part-time jobs, often they pay less, it's smaller businesses that are hiring. They don't always come with all the benefits of the big companies' jobs, and that was just what the last. Well,
you know, a lot of the job creation has been obviously in healthcare, and healthcare is, you know, they pay pretty well there for various kinds of.
But rationally, don't you think to yourself that a company that's going to go spend, you name the number, on sort of redoing all their tech around AI, think to themselves, I'm only spending this money if I'm going to get it back plus, or that I'm going to somehow save it in some other way. And therefore, they have to be thinking that they're going to be
we've had a hiring freeze for really since the beginning of last year, and I think a lot of companies said, you know what, we have to figure out how this AI works and what we can do with it. And so they looked all around their firms, which is a great way to increase your productivity, is to actually see where this kind of technology might work. And what they found is that in some instances, AI can be used to augment productivity of workers, so you don't have to get rid of workers. Some areas they did let go of workers, but I think in other areas they've concluded, you know, AI is not really relevant to what we're doing in this division. But again, the labor market numbers themselves speak to the point that I'm making here.
I don't know why
and that is things are improving.
Why everyone's in such a bad mood about the economy. But, thank you, Ed, and I switched again.
What are you doing now?
No, I switched from Gemini
to
my man, Claude.
Claude's your man now?
Oh my God, like head and shoulders. That you were right. And the U.S. government cannot.
Just save the tape. Say that again.
You were right. Claude is. I mean, I don't do any fancy.
On him. Say it again.
No, okay, but you were right about it. I don't do any fancy stuff like you do. Like just in general, it's mind-boggling. I mean, I'm scared. I'm scared at how great, what a cool guy Claude is, and how quickly he picks things up.
Yeah.
My daughter is the one who convinced me now.
Oh, so it wasn't really my doing.
But I thought about you as I was
Thanks.
just marveling at how much better it is. And I guess I'm a fanboy of Dario. You have to be.
Yeah.
But I use it in the lights dim in my house, so that must take a lot of
power.
Yeah.
Coming up, folks, the annual Robin Hood benefit to fight poverty in New York City is tonight. The organization raising millions of dollars each year for the cause. We're going to talk to Robin Hood's CEO about the event after this. The annual Robin Hood benefit is tonight, I should say, at Javits Center in New York City. Last year, the gala raised $72 million to fight poverty in New York. And joining us right now is Richard Burry. He is the CEO of Robin Hood. We had your founder on last week. He made a whole bunch of news about what's going on in the markets and everything else, but he also made an impassioned plea for folks not only to go to this dinner, but to contribute. Where do you think New York is right now in terms of its needs?
Thank you so much for having me. New York is in a really challenging place right now. We survey thousands of New Yorkers every year, New Yorkers living in poverty, at the biggest survey of its kind in the city, and the results are alarming. Right now, 2.2 million New Yorkers, that's 26% of us, are living in poverty. That's the largest number in the last 20 years. And if you look beyond that, even that number sort of understates the level of need, because more than half of New Yorkers are either living in poverty or struggling with material needs. So the city is very much challenged right now.
Do you think about that in the context of a broken private industry world or a broken public world? Meaning, do you say to yourself, a lot of sometimes I think to myself, the services that Robin Hood provides, which are extraordinary, shouldn't be needed? if we could get our act together?
That is absolutely the case. They shouldn't be needed. In an ideal world, there would be no Robin Hood. Certainly, if we could put ourselves out of business, that would be the mission. But it's not so simply as talking about public or private, because all these things are intertwined. The real challenge, the reason why poverty keeps increasing, what drives it most is the cost of living here. The poverty line is itself a measure of basic needs. And basic needs have been exploding for poor and working New Yorkers. So that's really, and so that's not a public separately or a private, it is really about having an ecosystem where it costs too much to get by here. And as a result, too many of us wind up being excluded from economic opportunity.
You guys work with the mayor?
Yeah, we work with every mayor. You know, we've been around for 38 years, and we've worked with every mayor, Democrat and Republican, in that time. And if you're going to be in the mission of helping New Yorkers really access economic opportunity, you've got to be willing to collaborate with anyone.
Do you guys get involved though, or I don't want to say lobby, but is there a back and forth about, for example,
Absolutely.
there's a whole conversation right now around pied-à-terre taxes and the like with the Ken Griffin of it. But the reason I mention it is if you look at the board, for example, of Robinhood, there are so many people in the financial industry that I imagine have a particular view on this that may put you either in the hot seat to articulate that view on their behalf or maybe not.
No, never, never. We absolutely get engaged in public policy because so many of the factors about the affordability of housing or the access to fresh food and affordable food have everything to do with the public sector. So we engage with advancing public policy at both the city and state level because it's critical for our poverty fight.
How much is it? So one of the other things I was going to ask you, which is a very interesting, I've never actually talked to Paul about this one. Robinhood does extraordinary things for New York and obviously raises extraordinary amounts of money. At the same time is, I think, oftentimes associated with, at least among folks obviously on this program, with the financial industry, and how you think that sort of translates on the other side.
I think it's very powerful because what it tells us at the end of the day is that all New Yorkers have a stake in making sure that every New Yorker has a stake in the American dream, that is real here. And that's what brought our founders together. It was after the financial crisis, and they, Paul, brought together some friends. The famous story is over Chinese food in Paul's apartment, because they wanted to think about what they could do to give back to the city that gave them so much. So for me, it's a powerful testament to the role that wealthy New Yorkers, those who've done so well in the city, how much they can do to give back to the city that has given them so much.
How much are you expecting to raise tonight?
We hope to raise, and I don't want to jinx it, we hope to raise similar to what we did last year. You know, the theme tonight is food. Food, of course, is the thing that brings all New Yorkers together, but it's also something that New Yorkers are struggling with. A third of New Yorkers are struggling with food insecurity, and so we're going to highlight the role that food plays in bringing people together and emphasize how important it is that every family who's working hard, who's doing everything by the book, should be able to put a full plate of food in front of their kids every evening without worrying about it.
Fair enough. Richard, thank you.
Thank you.
Nice
Thanks
to see
for having me.
Thanks.
Oil prices moving higher once again this morning. Take a look right now. You will see that WTI is up by about 2.5%. So is Brent. You've got WTI at $97.77 a barrel. Brent is closer to 103.81. Airlines are now dealing with surging jet fuel costs as well, and we will have more on how the industry is adapting and how it could impact travel plans. Squawk Box will be back in just a moment.
So here's what I want to leave you with. Chips on shoulders do create chips in pockets. My friend is right. The world is going to reward whatever you are quietly trying to prove, and I promise you it will reward it handsomely. Use that. Let it carry you up the mountain. But success and happiness, they're not the same project. They use the same tools. They sometimes point in the same direction, but they are not the same thing. And the engine that builds one will not on its own build the other. The most successful people I've ever met do not stop climbing, and that is a gift, but it is also a trap. So I'm not going to ask you not to climb. Every person in this room has already proven you know how to climb. I'm going to ask you to use it well. Use it to get up the mountain. Use it to do the work that no one else will do. Use it to stay in the room with people that you think are smarter than you. Use it to call the Stuart Elliott in your life every day at lunch until he picks up. But somewhere along the way, at the top of one of those mountains, when the air is thin and the view is wide and you have a moment to yourself, put down the binoculars. Stop scanning the horizon. Sit down on the summit just for a little while and take in the view. Because this morning, you are on top of one of those mountains. So enjoy it.
That was Andrew on Friday giving the commencement address at American University's Business School in Washington, D.C. He was awarded an honorary degree. That's some pretty sage advice.
It was, let me just say to those students, it was very cool to be with them. And the energy you get on a day like that, look, I can't even believe I was up there, frankly, because you think to yourself, you hardly graduated the first time. But it was really, really, really great to talk to them. And basically the message of what I was trying to say to them is, and I think it's true, we get to spend a lot of time with some of the most successful people who sort of shot the moon, if you will. And I was sort of arguing to them that a lot of that comes from a place, for better or worse, of insecurity. It's often driven by, I have a friend, Josh Wolf, who has this great phrase, chips on shoulders, create chips in pockets. And I think that's true in many ways, but you got to do it with some semblance of balance. And that was really the line about get out the binoculars when you get up there. Because I think a lot of the people that we know who get to the top, they just keep looking for the next peak.
Pretty well written, Andrew. Was that you?
That was me. I happen to be a writer, you know.
I know. Oh, it's no AI involved. See, if I do a commencement, I guarantee I'll have a good one. But I'm asking my man, Claude.
Claude?
I'm asking my buddy, write one for me.
Thank you. Thank you for that vote of confidence, Joe.
Yeah, it was so good. That's why I said, wow, that sounded like Claude.
Have you read any of my books yet?
I'm getting to them. You know my problem.
What's that?
I have Netflix. I have Netflix books.
Complicated.
Yeah.
Thanks.
Congratulations, Andrew.
Thank
It's
you.
really great to see you.
What's the honorary degree? Are you like Joe Biden? Are you like Dr. Andrew Sorkin?
I don't know about that.
Are you paid? Is it like a
You should just
say
start
yes,
calling me
yes.
doctor.
Yeah,
Just go
doctor.
for
just
it.
say
Okay.
yes.
I don't think it's a doctor, but maybe.
I'd like to play doctor. But I don't know if it would call. Okay.
I don't know. Now things have gone very,
Yeah,
very
just
peculiar.
Next tease. When we come back, the global jet fuel supply crunch putting the pressure on U.S. carriers going into the summer travel season. The CEO of Airlines for America, Chris Sununu, warns that airfares will move higher for consumers. He's going to join us with more on how the industry is handling the rise in fuel prices. That's next, right here on Squawk Box. The Iran war causing a global supply crunch, putting more pressure on the airline industry. Joining us right now to talk about ongoing jet fuel concerns is Chris Sununu. He is Airlines for America's president and CEO. Of course, he's also the former New Hampshire governor. And Chris, thank you for being with us this morning. First of all, let's just talk about where we stand with jet fuel right now, how much the prices have gone up over the last 10 weeks, and what that means to your members in terms of their bottom lines.
Sure. So just to talk the basics, while oil has gone up whatever it is, 30% or so, jet fuel is more than doubled, right? That crack spread, as we call it, has more than doubled. Now, what the airlines are doing, they're trying to be resilient. They're trying to be resilient for their customers. They're only passing a small portion of that onto the customer on the ticket. So we've already seen maybe a 20% increase in ticket prices. But the other 60%, I'll say, is being absorbed by the airlines, whether it's just kind of going to their, eating at their bottom line, or they're trying to be more efficient, right? They're trying to, instead of 4 flights from Wichita to Detroit, they're only doing 2 flights a day or something like that. So while we've seen demand still be there by the customer, that's a great thing, the airlines themselves are just trying to be creative to make sure they're not passing that entire cost increase onto the consumer. Because to fly a plane, about 25% of the cost to fly a plane is in the fuel. So when you see that massive spike, that 100% plus increase that we've seen because of the issues in the Strait, they're doing everything they can to make sure that that competition is there and flying is still affordable for the summer.
They're doing that because they assume that jet fuel prices will come back down if there's a resolution, if the Strait of Hormuz is open soon?
They're doing that because they're so competitive, frankly. They're doing that because they do everything, because price is such a driver for, how someone selects their airline or where they're going to go or the time they're going to go. So they're doing that just because there's so much competition more than anything else. If someone were to just pass the full cost of that fuel onto to one customer, everyone's going to jump ship, so to say. And they really do everything they can to retain their customers. The issue they're seeing the most is over in Europe, right? Because we're resilient, much more resilient on our fuel here in the United States. So what we're looking at more is what's happening in Europe. There is a shortage over there, much more drastic than it is here. How does that impact international travel? How will it impact folks coming over from for FIFA and international travel this summer? And most importantly, how does it affect our cargo carriers? Because our cargo guys, the FedExes and the UPSs, they have to refuel a lot more over in Europe and Asia than our passenger carriers do. Our passenger carriers go and come back, but the cargo guys will hop over there a lot more. They just have a very different network and system. So those charges are kind of being monitored very closely as well, because again, you want to send a package from here to Dublin or whatever it might be, that's where you're going to see potentially a higher hit on cost.
So Governor, obviously you're a Republican, like a New England Republican, but you were a Republican, so we'll keep that in mind. But what happened, in your view, if an airline can't stand 6 weeks of increases in jet fuel, I guess they're not hedging. A lot of them used to hedge, and it didn't matter what happened, really. But, like everything else, this has become a political football for what really happened with Spirit. And a lot of people blame, the last administration for not allowing that merger to go through. And the same people that were most vociferous about stopping that merger, like Elizabeth Warren, another, New England politician, but, she says it's purely the Iran war that caused it. It has nothing to do with not letting the two merge. Should they have merged?
So a couple things here. The jet fuel crisis had nothing to do with Spirit going down. Spirit was in a financial debt spiral for 3 years.
Governor, they say it had everything. To do with
Spirit had declared bankruptcy. They tried to merge in 22. They didn't allow it to happen. They had a couple more bankruptcies. They were in a financial death spiral for the last couple of years. There's no question about that. Unfortunately for them, it was a great airline, but unfortunately their model didn't work. A low-cost model does work, by the way, but their model didn't work. So the Frontiers, the Avellos, the Breezes that just came online, they're doing some really creative, interesting things down that low-cost model that can work and will work, and I have no doubt that they will be successful. So let's just get past that. On the airlines, they're being amazingly resilient. This is going to cost airlines well over 25, probably closer to $35 billion this year. They will absorb the majority of that just to their bottom line, unfortunately. You're talking a lot of, net losses of somewhere 12, 15, 20 billion to the industry. I mean, it's incredible. They're only passing a small piece of it on, because they're trying to be so creative about all these other pieces. I don't know how the other political question comes in. Look, I have to follow Andrew, who was talking about, looking at the highest of peaks. That was an amazing speech, Andrew, by the way. And now you're doing an interview from, see the building behind me? I'm in the swamp right now, right? And I have folks in that building right now saying we should go back to 1970s regulated airlines, when the ticket prices were 3 times higher than they were today. The average ticket price was $1,000 back in the 70s versus like $300 today. And you have more people flying today than ever before. So folks in that building behind me just are not doing math. They're refusing to do basic math because populism is winning the day. They think they're going to fight for the little guy. They don't know how to look at a balance sheet, don't take 2 seconds to understand how a business works, and they make crazy statements like go back to a regulated atmosphere, or they say we're not going to let Spirit and JetBlue merge because that won't be good for the customer, without ever looking at the business proposal. While Spirit was begging for help, they were begging for help, and they just didn't allow it to happen for politics. So let the market work. Let the free market work, and it does best for the customer. And that's what we're seeing today. All the additional costs of jet fuel are not going to the customer. That's an amazing thing because the government is staying out of it because they're letting these folks compete. It's really resilient.
Chris, let me ask you, the last time we had the CEOs of the airlines on was about a week and a half ago, maybe a week and a half ago, when they were reporting earnings. At that point, they all basically said it didn't look like they were going to have to stop doing flights to Europe this summer because of shortages of jet fuel. Has that situation changed at all since then? And what is the timeline? If the strait's not open, by what time?
I don't think they're going to stop doing flights. I think what they'll do is, as I said, instead of doing 3 flights a day, they might do 2 flights a day, and they'll make sure that the capacity, that the usage is higher, right? And so we're already seeing about the same capacity this year as last year, even though we're in a war. That's amazing. That's amazing in itself. So I think they're still very optimistic for the summer. The only policy, by the way, to get through this is this opening the Strait of Hormuz. We've talked about the Jones Act waiver. That's helpful. Or even a tax holiday. That would be helpful. But at the end of the day, the only thing that really matters is getting that strait open. And I think folks know that, if we can get that done in the next month or two, there's still a lot of optimism that prices won't go down the next day, by the way. They'll be sticky. They'll slowly go down over time. But hopefully by the end of the year, we get out of this and we're in somewhat of a back to normal, whatever that looks like.
All right. Chris Sununu, thank you.
You bet.
Higher jet fuel and gasoline prices, we're just talking about that, will be one of the topics on the agenda for NEC Director Kevin Hassett. He's going to join us at 8:40 a.m. Eastern Time. Squawk Box returns in just a moment.
Coming up, cross-border payment platform Wise making a big move. We're going to talk to the company's CEO about listing right here at the NASDAQ and how this plays into the firm's plans to expand the business. You're watching Squawk Box, and this is CNBC. Welcome back to Squawk Box. Today marks a milestone for cross-border payment platform Wise, the company moving its primary listing from the London Stock Exchange to right here at the NASDAQ. Joining us ahead of the first trade is Christo Carmen. Is that how I pronounced it correctly? CEO and co-founder of Wise. Good morning to you. Let's get the backstory. Why do this? Why are you coming here?
Well, we've been listed in London for about 5 years now, but we are a very global company. Our 19 million customers are everywhere in the world. In fact, we have more customers in the US than we have in the UK. And US is the most accessible stock market there is in the world for our shareholders, for our customers, for anyone who wants to hold Wise.
For those who don't know exactly what Wise does and how it works, explain it.
I started Wise about 15 years ago because I made an expensive mistake. I had to move money.
What was the expensive mistake?
I used my bank. I used my bank to move money, most of my salary from the UK to Estonia at the time. And I realized I got charged twice. Once it was the upfront international wire fee, maybe $30, $40. But then I realized there's another 5% markup that they put on an exchange rate. So if your money crosses from US dollar to anywhere else in the world, it's going to cost you money, a lot. So 250 billion pounds, sorry, dollars, $250 billion is what banks collect in these hidden markups and exchange rates all over the world. And US is no different.
Right. So where do you fit in? We had the CEO of Circle on earlier today, stablecoin universe. How do we think about what you do versus what they're doing versus, frankly, what some of the other sort of players in this space are doing?
So we're moving money from your bank account wherever in the world instantly in less than 20 seconds to anyone else's bank account in any other part of the world. From real money to real money, instant and very cheap.
But is it cheaper than the world of stablecoins, for example?
Yeah.
Okay, so what do you, therefore, if that's true, why is there a stablecoin market?
I think there's use cases for that.
Okay.
That's for moving stablecoins around, for moving crypto around. There's definitely going to be use cases for stablecoins.
But how, I guess the bigger question therefore is how do you see all of this netting out? So we have this whole new world of crypto exchanges effectively representing cash in certain ways. We have you representing cash, or maybe actual cash.
Actual cash.
And how we should think about those two things. Do you see what I'm saying?
I think digital money is going to evolve, so that's all for good.
Right.
And moving US dollar around, whether it's the form of, Fed wires or form of stablecoin, I think there might be benefits in one or the other. But if you want to move from one currency in one country to another currency in a different part of the world and have it be usable as money, there's no other better way.
No,
than
I understand
money.
there's no other way today. I'm just saying, as you look down the pike, call it 5-10 years from now, if we had all these crypto characters around the table, they would say, nobody's going to be doing what you're talking about, I would think. And I imagine you might say that nobody's going to be doing what they're talking about, maybe. Or maybe you think that they all just coexist.
I think they're all going to coexist. I think there's going to be use cases for crypto, and crypto's been around for a long time. There's still use cases for that.
Right.
And there's use case for money. Money's been around forever.
Right.
And there's a lot of use cases for that.
Okay. It's nice to see you. Thank you for coming in. Congratulations. Welcome to the NASDAQ.
Thank you.
Thanks.
All right, it is almost 8 a.m. on the East Coast, and you're watching Squawk Box right here on CNBC. I'm Becky Quick, along with Joe Kernan and Andrew Ross Sorkin. Among our top stories this morning, President Trump saying Iran's response to the U.S. peace plan is, in his words, totally unacceptable. Tehran is demanding war reparations, an end to Israeli strikes on its proxies in Lebanon, and total sovereignty over the Strait of Hormuz. As a result, oil prices at this hour are higher. You can see WTI up by about 3%, so is Brent. WTI is at $98.34. Brent is at $104.27 a barrel. And a series of Senate votes this week could confirm Kevin Warsh as the next Fed chairman. Senators will first have to vote to add him to the Federal Board of Governors and then vote to make him leader of the central bank. The final vote could be on Wednesday. And a French woman and an American both tested positive for hantavirus after an outbreak on a cruise ship. Passengers were evacuated and quarantined as countries rushed to bring home travelers. 3 people have died, but health officials say that the risk to the public remains low. We'll be speaking to former FDA Commissioner Dr. Scott Gottlieb in just a few minutes. We'll talk to him about this and much more.
Check the futures this morning. We have worsened a little bit, at least as far as the Dow is concerned, down 85 points or so. S&P giving back about 9. Muted response to what we just heard. That you read from the president in terms of Iran after a series of new highs. Amazing to watch, really, last week, to watch the averages as the S&P just right through 7,000 up to 7,400 in recent weeks. With so many people just clueless about that happening. A lot of the people we have on, but that's okay. I guess they can come back. Treasuries this morning, 4.39%. Let's get to Dom Chu with a look at this morning's pre-market movers. Dom, what's up?
Well, Joe, it has made 401ks great again, so that's something to keep an eye on for sure for these indices. Let's talk about what's happening with vaccine makers right now because of Moderna and Novavax both gaining, well, Moderna up 9%, Novavax up about 4%. This is on top of double-digit gains on Friday related to the latest in the hantavirus. Moderna said in a statement last week that it has done early-stage vaccine research on the hantavirus, and Novavax has a strong vaccine development program and a history of developing treatments for pathogens like Ebola, MERS, Zika, and others. So keep an eye on that vaccine complex tied to hantavirus. Shares of Sony, meanwhile, jumping, you can see here in Japanese trading, up by about 8.25% in Tokyo overnight, after the company on Friday announced a joint venture with Taiwan Semi. The company's plan to design and produce next-generation image sensors. Sony expects to be the majority and controlling shareholder of that new joint venture. The company also, by the way, issued upbeat guidance for the current fiscal year as well. So on balance, Sony Group shares in Japanese trading up 8%. And then on our side of things, Intel shares are up another 5.5% pre-market after a nearly 14% gain on Friday. This is after the Journal reported that it reached a preliminary deal with Apple to make some of its chips. Those gains for Intel adding up to a massively historic 515% gain in the past year. B of A analysts are raising their target price on Intel, saying the Apple deal could represent a roughly $35 to $40 billion opportunity for the chip maker. So Intel shares up 5.5%. Great run for Intel, Joe. I'll send things back over to you guys.
That's mind-boggling. It really is. Never thought I'd live to see that day. Dom, back. Intel's back and never been at levels like this.
Above the dot-com highs, so you got it there.
Way above. All right, thanks, Dom.
You got it.
For more on the markets, I want to bring in Liz Thomas. She's the head of investment strategy at SoFi. Good morning to you. Are you?
Good morning.
Are you surprised that the markets are as resilient as they are in the face of what appears to be no deal? They went up on news on Friday that a deal was in the offing, and now we have no deal, and the markets sort of shrug.
Well, the market broadly, the headline part of it, looks resilient, but really under the surface, it's not all that resilient. And I think that's misleading when you talk about it as an investor. We've got tech leading everything. I mean, semis are up 65% since that March low. It's not everything else that's taking part. And
Right.
a lot of technology and communications is relatively shielded from the war. So I think, yes, there's a lot of optimism in it that investors are hoping for the resolution that seems to never be coming. We just continue to push it forward and forward. But earnings and the fundamentals in tech and communications are still telling people that there's opportunity and there's reason to buy. So I don't think we should be surprised that there's resilience in those sectors. But I would be surprised if it continues and we don't start to see other participation from places like banks. We need to see some of that cyclicality pick back up again.
What do you make of the AI trade right now?
Meaning, is there opportunity in it still?
Yeah, is it done?
Where are we?
Exactly.
I don't think it's done. No, I don't think it's done at all. That doesn't mean it's going to go up unabated. I do think that we'll have some relaxation. But what's happened since the beginning of the year, largely due to the war,
Right.
is we've seen multiple compression, right? We've seen multiples actually stay contained because earnings have been so strong. And you could actually argue that there's a little bit of a bubble in earnings expectations. But we've seen multiples stay contained, which I think has just elongated the runway for that. So back to the point I made before, if you have AI as a theme, themes play out over a number of years. We all know that. Nobody knows how long it might go on for. But if you have AI as a theme, you have to believe that eventually it starts to benefit other sectors.
Okay.
So from a market strength perspective, particularly a place like healthcare, you want to see healthcare start to take part in an AI trade. We watched something like utilities take part in that trade. We've watched copper and gold take part in that trade, but we haven't seen other sectors benefit from a lasting fundamental perspective from the productivity that I still think AI can bring.
So what would you do right now?
I would buy some of the stuff that hasn't kept up yet. I don't think that this is the time to jump on the semiconductor train. I think that we probably do see a pullback, a pause, or at least some sort of relaxation in the stuff that's gone up so parabolically since March 30th. But you have to believe that if we're not going to see a recessionary pullback due to the war, that you'll have more opportunity.
You're just a doppelganger for a guest we used to have on all the time, Liz Young from BNY Mellon. It's so amazing.
Same person, Joe.
You're the same
I
person.
am the same person.
It's now Liz
Yes.
Thomas, not
Correct.
Liz Young, and no longer BNY Mellon, but
Right.
it's now SoFi.
Yes.
Did you have a horrible track record and that you changed your name and changed the...
I just
We have
left
a
the
new
whole-
guest today,
left the whole identity
Liz
behind.
Thomas, with a whole... She has no calls from the past that we've ever highlighted on Squad.
That's not true.
Were we just
did a
gonna
whole-
blow
we did a
this
whole
off?
Bridging gap.
You got married.
I got married.
Congratulations.
Thank you.
But it's not that recent.
No.
But I did think... I knew it was you, but I just thought that we should mention
Good.
that.
I was worried that you weren't paying
No,
attention.
because if we have episodic viewers that do watch for a while, they know you as Liz Young and
That's right.
from BNY. Well, congrats and congrats.
Thank
And
you.
your calls have always been excellent.
Thank you.
Thank you.
Thanks for
Appreciate it.
having
Nice to
me.
see you.
Doppelganger.
Thanks for having both of us.
Yeah, right. Yeah, you're both long and short, right? Liz Young has a 7,800 price target, and Liz Thomas is down at 5,200 on yes.
Right. I'll be right either way.
Beautiful. UBS used to do that. They had a good guy and guy for the sled.
All right, when we come back, American passengers from the cruise ship at the center of the hantavirus outbreak arrived in Omaha earlier this morning. Former FDA Commissioner Dr. Scott Gottlieb will join us with the latest on the outbreak and what you should be thinking about. And then later, NEC Director Kevin Hassett on the president's trip to China, the Iran war, and prices at the pump. Squawk Box will be right back. A plane carrying 17 Americans and a British passenger who resides in the U.S. landing in Omaha earlier this morning after being evacuated from the cruise ship at the center of the hantavirus outbreak. Our next guest says that the risk of a wider outbreak is low. Joining us right now is former FDA Commissioner Dr. Scott Gottlieb, who is also a CNBC contributor and serves on the boards of Illumina, Pfizer, and United Health. And Scott, thanks for coming in today.
Thanks a lot.
I don't think we've talked about hantavirus at all on this show before this morning. We've been watching this cruise ship, kind of keeping an eye on it, but now there's the point where they're bringing passengers back to the United States, back to other countries. In France overnight, a passenger there did develop symptoms on the plane on her way back, and I believe those conditions worsened in the hospital overnight. How do you look at this? How do you try and figure out what comes next?
Well, these cases probably are from the initial infection on that cruise ship. The last death on that cruise ship was May 2nd. That patient developed symptoms on April 28th. So the people who are coming back are still within the incubation window. Probably they'll be in that window through mid-May. So we're not out of the woods for the initial cases on that cruise ship. And it's possible that you're going to see more cases among the people who were brought off that cruise ship develop. And I think that's what we've seen overnight with these two Americans, not confirmed yet, but suspected cases among these two passengers. There could be others. What we haven't seen yet is forward spread. People from that cruise ship infecting others who weren't on the ship. There were a couple circumstances where that might have happened, particularly the flight to Johannesburg from one of the patients who died shortly after disembarking from that flight. People on that flight probably are at risk, so they need to follow those people closely. They're doing that. Public health is doing that. We could see some forward spread. I think net, this is going to be something that public health officials can't contain. They're keeping an eye on all the people who are exposed to it, certainly from the cruise ship and the secondary potential infections. So I don't think this is going to get out of control, but we could see some additional cases, particularly from the passengers who are disembarking.
I think the two maybe scariest points on this are, A, the 6 to 8 week incubation period where you may not have any symptoms. We don't know what happens over that period of time. The second is the mortality rate. It's at 40%, is that right?
Right, 40 to 50% case fatality rate. The incubation period could last up to 6 weeks. Typically, it's shorter than that. So I think if you're looking at people from that cruise ship who are exposed, you probably date it to mid-May. That's going to be the peak period when they might contract symptoms. Typically, what we believe about this particular strain is you're not infectious until you develop symptoms. There's some outlier cases based on past precedent where people did seem to be contagious even before they had symptoms. We also believe that it requires close contact. Again, there's some outlier cases historically from the outbreaks that we've had where people seem to have spread it over longer distances. So we need to have some humility here. There are these outlier cases, but the vast majority of cases look like they require close contact. It looks like you're not infectious until you develop symptoms. And the progression from symptoms to severe disease is very short.
Respiratory droplets or no?
Respiratory droplets.
Is that how you do? That's how
It's not. It doesn't appear to be in most cases airborne. I say most
Not
cases
airborne, yeah.
because if you look back at that 2020 New England Journal of Medicine article, which documented one of the outbreaks in Argentina, there were some cases where it appeared to spread over longer distances. Now those are outlier cases, but we don't know what happens when this gets into a cruise-like setting where it's an easier
So
environment.
40% mortality for someone 80 or for someone 40?
Yeah, look, this does have a predilection for people who have underlying diseases like any other virus, but people who are otherwise healthy seem to succumb to the virus as well. It creates what we call a cytokine storm, so it's an overwhelming immune reaction from the virus
Like
that
sepsis.
causes death. Like what you see with, like what you saw with SARS-CoV-2 in severe cases, there are drugs that could be potentially effective. They haven't been used before. I suspect they may try them in these
But
settings.
it's not respiratory.
It has a predilection for the lungs. It causes overwhelming inflammation in the lungs. That leads to this overwhelming immune reaction. So it targets the microvasculature in the lungs.
It's not, you wouldn't have intubators like we did with COVID, or would
Typically people who become severely ill are treated with ECMO, which is a form of cardiopulmonary support.
I see.
Scott, while you're here, let's talk about some other issues too. We've been talking this morning about Marty Makary, the head of the FDA at this point, and some reports last week and then over the weekend that the president was going to relieve him of his duties. The president himself did not go along with that on Friday in the Oval Office when he was answering some questions, said he'd heard about it, but was not anyone behind any on this. What do you hear? What do you know, if anything?
Yeah, look, someone was putting that out to all the press on Friday, and someone senior enough that the reporters were covering it. I don't think people would have put that into the press, multiple outlets, unless they had some substantiation. I don't know the latest status of what's going on at FDA. There's been speculation about potential people who could act in that position. Look, Marty's a friend. I think he's done some admirable things in that role. I think the continued upheaval at that agency is having a detrimental effect. You know, from my perspective, part of the challenge that he faced was the people he put into positions. People like Vinay Prasad at CBER, he put a political appointee in charge of the drug center. When I was there, I had the benefit of strong career leadership in those medical product centers who solved problems and were able to get things done. I think Marty has not had that benefit, and he's had some stumbles as a result.
Has not had that benefit, meaning these were political appointees with an agenda, not somebody who was just going to follow the science?
Basically, you know, look, he appointed them, and I think, again, he's done some good things at the agency. He got a lot of non-synthetic food dyes approved. He also implemented or started to implement reforms to the phase 1 development process. But I think ultimately he has run into obstacles, and the agency's run into obstacles because there's been weak leadership in some of those medical product centers who've made bad decisions. One of them is now gone, Vinay Prasad. The Cedar Center director is still someone who doesn't have prior experience in that role, and I think that that's been an obstacle inside the agency.
So Moderna's up? a lot of stock. They're working on it. Why can't they just?
Yeah,
why
look,
can't they can't just make it quickly? with
I will say
mRNA?
I don't think a vaccine is the right approach to this because there's not going to be enough spread to support a
If
vaccine.
there were.
Because there's not enough money in it.
It's not. It's
That's what we're always come back to money.
You wouldn't mass deploy a vaccine. Maybe you would use a vaccine to ring fence an outbreak. In China, they actually have vaccines for this. They have it, but they have a different strain. They have upwards of 10,000 cases a year, but it's a much different strain. I think what would be effective here is a therapeutic. So you could see companies like Lilly or Regeneron who developed antibodies against viruses in the past, perhaps being able to develop something here. I think there's also drugs on the market that could intervene on that cytokine storm we were talking about, drugs like tocilizumab, which aren't used in this setting, but potentially could be. So there are therapeutics that might be available, and I think the optimal circumstance would be if a company could develop an antibody that directly targets the vaccine, that virus that could be used as a therapeutic, not a vaccine.
Can we handle sepsis now? Remember how hard we tried to find? I remember Synergen, Seneca.
Yeah, it's not sepsis, it's cytokine storm.
I know,
So it's
but
overwhelming.
sepsis can cause a cytokine
Right,
storm
so
the
there
same way.
are interventions to treat cytokine storm. So for example, patients who receive CAR T therapy will sometimes develop a cytokine storm. In that setting, they use anti-IL-6 drugs like tocilizumab to mitigate that. So could that be effective here? Typically it's not used. ECMO is used, supportive therapy. If patients get into good care settings, the survival rate's upwards of 80%. At this Nebraska facility where they're being taken, they'll know how to handle this.
Can we talk about flavored vapes? That's been another area that,
Flavored vapes.
yeah. Marty McCary's come under pressure for not doing it as quickly, for bringing these products to market as quickly as some of these vaping advocates would like. You're somebody who looked at that and said, wait a second, we should not be doing any of these things because it's marketed to kids.
Yeah, look, the concern was the marketing to kids and Juul at the time. These could be good products for currently addicted adult smokers to help them quit tobacco. It also could be good products for adults who want to get access to nicotine but don't want to consume the products of combustion, because after all, the death and disease from tobacco comes from the products of combustion, not the nicotine itself. On Friday, they announced a policy of enforcement discretion that's going to allow all the vaping products and the nicotine pouches that are currently under review at FDA to come to market. That's going to be hundreds of new vaping products. This was announced late in the day Friday. I think it wasn't widely covered because people were chasing the story about Marty's potential departure. This is going to be very profound. You're going to see companies put dozens, individual companies put dozens of new vaping products onto the market as a result of this policy. I think the right thing, if there were applications sitting with the agency for a long time, so they needed to resolve that. If they were going to use an enforcement discretion policy to allow those products to come to the market while those applications were being reviewed, I think there should have been some governing principles, like they should have allowed products that had age verification on the devices, and there are some of those being developed, not allow the full panoply of products to come onto the market that haven't been reviewed by the agency. That's where we are right now. I think you're going to start to see these things show up at convenience stores and other kinds of places that sell tobacco products.
Did you ever go back? Can I put your name up?
Have you been invited back?
Look, I think there are some good candidates for this job, potentially. They talk about Kyle Diamantis, who's the head of the food center, who's done a good job, is well respected in the agency. I think would go over, very well. There's a couple other people there who are, Grace Graham, who's been a long time staffer on the Hill, knows FDA very well, is now deputy commissioner. So there are names that have been talked about in the press as potential acting commissioners, and then they would need to initiate a search. Look, I hope Marty is able to persist in this job. He's a friend. I think he's done some good things. I think he understands the role better now. He's learned a lot since he's been in this position.
Maybe we should ask it more directly. If you get the call, would you do it?
Look, it's not the right time for me to go back into a government role. I would look to support them in any way I can.
Have you gotten the call?
Any discussion I had was early on in this administration. Nothing recent. No.
This administration, not the last one. He's only been, 400 days or something.
Yeah, but President's been in office for almost 2 years now, right? So there was vetting done early on.
Since the elections.
Right.
Time flies when you're having fun. Has it been 2 years?
I'm having fun.
Yeah. Okay.
Dr. Gottlieb, thank you.
Thanks a lot.
Yeah.
Still to come, folks. The war in Iran hitting one of the world's largest fertilizer producers. We're going to tell you about that right after this. And then later, a high-stakes meeting between President Trump and President Xi Jinping. Later this week, we're going to speak to National Economic Council Director Kevin Hassett from the White House about that trip, Iran, and so much more. Do not go anywhere. We're coming right back.
Shares of Corning are rising in pre-market trading. The optical components and specialty glass maker already riding a 5-day win streak. See right there, gained 17% in that period. Last week, Corning announced a partnership with NVIDIA to expand production of components used in AI data centers.
Meantime, shares of Mosaic are sliding in pre-market trading. This because Mosaic is one of the world's largest fertilizer producers. Reported quarterly profit of 5 cents per share. Analysts had been looking for a profit. You ready for this? 24 cents per share. The Iran war has tightened fertilizer supplies and driven up prices, but also increased Mosaic's input costs, and that is weighing on the stock this morning, down close to 6%. Meantime, Fortress co-founder and billionaire Milwaukee Bucks co-owner Wesley Edens, at the center of a crazy, wild, alleged sextortion case. That's what we're calling it, sextortion. That's according to a Wall Street Journal report that says that Cheng Li Lu has been charged with blackmail. This after she and Edens had a brief sexual relationship. Lu was then indicted last year, accused of trying to shake down Edens for more than $1 billion by threatening to publicize videos and photos of him having sex with her. Now, she's pleaded not guilty. Edens expected to testify at the upcoming trial. When you talk about salacious and wild and crazy and all of these strange allegations about videos being created, doctored, who knows what is happening here. The whole thing is sort of a... It's made for the tabloids, is what we should say. Made for the tabloids.
I don't know. I know Wes. I love Wes. I mean, I don't think he was married.
No, it said he was. I mean, from what I've read only from the papers, it said he was divorced at the time. I'm not sure
what do you do that what torsion is involved? I think he's married now, but it wasn't.
No, it said he was divorced at the time.
But clearly being extorted. I mean, that's
right. Yeah.
You know, over whatever's. I mean, and there's all sorts of other wild allegations. You can go read up on them if you want. I don't know. We'll see.
Don't meet people on LinkedIn. That might
this. Right. That's how he met her, apparently.
It's probably not.
If you believe that part of this.
I'm not on LinkedIn. So. I'm not on anything. That's why I'm so pure. I mean, it's great.
All right, still to come this morning, new data on how U.S. manufacturers are handling higher inflation and what it means for the consumer. And then NEC Director Kevin Hassett will join us. We'll be right back.
Inflation in focus this week with the release of the CPI on Tuesday. Senior economics reporter Steve Leisman joins us with a look at how inflation expectations are rising and hitting company bottom line. Steve.
Hey, good morning, Andrew. Yeah, the conflict in the Middle East boosting the outlook for inflation for the full year and raising concerns about profit margins, but so far having an only modest impact on the overall growth forecast. The NABE industry outlook 3-month expectations in the survey shows that a net negative 18% see rising profit margins over the next 3 months. A positive 42% are charging more, and that's the most since 2022. Net positive 63% see their material costs rising, and only 12% on net see their CapEx increase. That's the lowest since May of 2025. Gregory Dacko, he's the NABE president. He comments nearly half of respondents report a negative business impact from the Iran conflict, with nearly 1/4 reporting plans to scale back investment and hiring over the next 6 months. Still, despite an outlook for higher inflation, overall growth, while taking a hit, expected to soldier on around 2%, according to the latest blue chip economic indicators. Those indicators show GDP at 2%. Now that's down 0.5 point from February. CPI, though, up 0.7% for 3.4% for the full year. And real disposable income up 1.1%. That's down 0.7 from February. The consensus for tomorrow's CPI puts headline inflation at 3.8, but core inflation better contained at 2.7. That shows that so far the energy price surge not expected to pass through, at least entirely, to core inflation ex food and energy. But it is passing into views on the Fed, with only 7% probability of a rate cut priced in through the end of the year. Andrew.
Okay, Steve, thank you for that. And we're going to probably get into some of this with our next guest, Becky.
Up next, in fact, NEC Director Kevin Hassett on the president's upcoming meeting with President Xi Jinping and much more. As we head to a break, though, let's take a look at the futures. You'll see right now we're down modestly. Dow futures off by about 17. The S&P futures down by 8. The NASDAQ off by 30. Squawk Box will be right back.
And we are gearing up to talk to Kevin Hassett in just a couple of minutes. So let's check on the markets beforehand, which have improved a little bit, but still in the red. The Dow's now down about 26 points. Muted reaction to what the president said about what he thought of Iran's counter proposal. But the market's not doing too badly. The 10-year, I think, was about 439 or so, 438. Right now, oil was higher, both WTI and Brent. I think it has moderated a little, 97 on WTI. And then if you look at Bitcoin, I think we've been around 81,000 or so, 81,270. Take a quick look at the dollar, and then check out gold. It runs down, get you caught up on all the market action. This morning, gold's down about $25.
Also news from the United Kingdom. Prime Minister Keir Starmer delivering a reset speech after his ruling Labour Party suffered heavy losses in last week's local elections. More than 40 members of his party have called for him to step down. Starmer has insisted that he will stay and said that he plans to lead the Labour Party into the next general election, which is due in 2029. Speculation over a potential change in the Prime Minister has put increasing pressure on already high government borrowing costs. You can see the 10-year gilt at this point, year to date, is up by about 11.5%. Still to come, NEC Director Kevin Hassett. He will join us right after this break.
Join us now to talk about the state of the economy and much more. White House National Economic Council Director Kevin Hassett. Always good to see you, Mr. NEC Director. I remember when you were in the running for the Fed, the president said, I don't know, I'd hate to put him as head of the Fed because when he goes on TV, he's so good at talking up whatever the president is intent on getting across. And you are good at that. You're so good that people, I don't know, people want me to challenge every single thing you say, but I have a hard time.
Let's go for it.
I have a hard time. What I'll challenge you on is why people seem so glum when so many things are good. And here's a 1 month chart of the S&P. We had Ed Yardeni on earlier. And Kevin, we did mention, kind of weird for the market today, really shrugging off what the president said about prospects for that counter proposal. It's almost like a beach ball. We analogize it to that in a swimming pool. You pull it down, it comes right back up. And Yardeni, who's a pretty good strategist, I don't know if I'm sure you know him, and you've known him for years.
I respect him a lot, yeah.
Yeah, he stuck. On Liberation Day, he lowered his target for last year, and then wished he hadn't, and went back to 7,000. He raised his S&P target today to 8,250. He was at 7,700, and I kept asking him, what is going so well to have the markets continue to go up? And he said corporate profits are good. He said consumers still have money and they're still spending. He said we had the good jobs number on Friday. Then why is consumer confidence at all-time lows, Kevin?
Yeah, I think it's a great point. And to go first to the first part about what Ed's saying, I think that the market is doing so well precisely because there's been so much positive earnings surprise, and that it's happened a few quarters in a row that almost everybody's earnings are way above the estimate. And one of the things that we've seen over time is that earnings surprises are positively correlated. So if you have a couple of quarters in a row of earnings surprises, then people tend to not jack up their earnings forecast as much, and you get another one. And so I think that Ed's forecast, while the White House doesn't have an official S&P forecast, it seems consistent with the trajectory of earnings, I can say at the very least. And that's all happening because of AI and because of the Trump tax cuts and so on. I think that one of the things that's happening is that the world is changing so fast right now that President Trump has sort of taken every problem on earth and got 100% at fixing it. And I think that can be stressful for people to see so much change going on. But the bottom line is that in the end, when we look at what happens for elections, that people look at their wallets, they see how they're doing. The economy's growing very strong, incomes are growing. And Ray Fair, you and I have talked about Ray Fair for 20 years. Ray Fair of Yale says that GDP in the second quarter is the thing that tells you what's going to happen in the election. And so I think that right now Republicans should feel very, very good about the trajectory of the economy.
Okay, but the president ran on affordability, and I've argued with the other side on multiple occasions. Look, you do 23% price increases over 4 years. This isn't why we have an affordability problem, because of where inflation is right now, but it is up from where it was when Biden left office, and maybe it's up. I don't know what figure you want to use, whether you use core or headline or whatever. It was lower when he left. It's higher right now, and the president promised to tackle affordability. Now we do have a war, and we've got $4.50 gasoline prices, and that's weighing on people who may have voted for the president because he thought it was going to get easier to make their paycheck, last till the next paycheck.
Right. Well, first of all, you're right about the top line, but on the core, it's more of a mixed bag. If you look over 6 months, then it's averaging 2.6, which is better than what we inherited from Biden. The bottom line is inflation is going down at the microeconomic level by a million things that we've done, like fix the avian flu so egg prices are down, change beef imports so that beef prices go down, make drug prices more affordable with Trump RX and so on. And so if you look at the individual items of the CPI, that at the micro level, lots of things are going down because of specific Trump policies. But at the macroeconomic level, the driving force right now is the temporary increase in the price of gas.
What are we going to do with China? What do you think the president's going to try to accomplish?
Well, I think that everybody's going into the meeting with China extremely ambitious, that President Trump and President Xi have a very strong relationship. And, but when you go into a negotiation, if you say, hey, I think this is going to be the best negotiation ever, then you're kind of giving up negotiating leverage as well. And so I think that right now, we'll let the president negotiate. He's the best negotiator on earth, and we'll see what happens. But we've got lots of things that we could work out with China that would be good for both sides. And so we're very, very hopeful.
How does the closed strait and China's dependence on Iranian oil and us being, I'm talking about the United States, sort of being, not the eye off the ball with China, but we certainly got a lot of balls in the air right now in Iran. How does that change the calculus for how he approaches President Xi?
Well, I think that just, how the president approaches President Xi, the president will decide how to do that. But what I can say is that the Chinese import about 11 billion or million barrels a day of imported oil, and a lot of that comes through the straits. And right now, it's held up. The Chinese boats that were trying to get some oil to China were charged tolls by the Iranians. And so I would guess that that's a relationship that the Chinese would like to reinspect right now, because certainly the stress on them from the reduction in the supply of energy is much, much bigger than the stress on us. The other thing I would say, Joe, and I think this is one reason why the markets might be reacting the way they are, is that there doesn't have to be a rush. If you look at the economy of Iran right now, it's literally falling apart. That they've got a hyperinflation, the businesses are closing, they're starting to have food shortages. So Iran has almost the maximum amount of economic pressure on a country that is possible to have. And so I think that it's really frustrating for the negotiators that the Iranians won't take their reasonable deal, but there's no rush because the Iranian economy is really, right on the edge of collapse.
Hey, Kevin, we spoke with Mohammed El-Arian earlier this morning. Hi. His analysis is that if this lasts another 6 weeks or so, and by this I mean the strait being closed, that it could push the globe into a recession. Obviously, we're a little more insulated in the United States with what we've been dealing with on energy prices and beyond. But he said that there's a real issue when you start getting around the world, and that 6 weeks is about it. So Iran might be in a difficult position. How do you see the rest of the globe's position?
Well, for the short run, there are, for example, Asian economies that are harmed severely by the high prices. And one of the things that you're seeing is that the price of jet fuel, for example, is really, really high, and there's a whole bunch of commerce in Asia that depends on flying around. And as the refineries turn the knobs up so that they have more jet fuel in response to the high prices and more diesel in response to the high prices, then that reduces the supply of gasoline and can make those prices go higher. That's a very disruptive thing in Asia, but in the U.S., it's very unlikely to cause a recession because we're such a strong energy producer. Now, it doesn't mean that we're not focusing on everything we can do to reduce the price of gasoline at the pumps within the U.S., but I think Mohammed is looking to what's happening in Asia and perhaps to Europe as well, and thinking, geez, how long can this last? I think that there are a lot more private reserves than people give us credit for, and so I think that the burn rate is a lot slower than what Mohammed says, but for sure there is a risk that if this thing goes on for a really extended period of time, that the Asian economies will be the first sign of severe distress.
Hey, Kevin, I got two AI questions for you. The first is, we had Paul Tudor Jones on last week, who made both a bullish short-term case for AI, but boy, did he have a long-term, I don't know if it was a long-term, a bearish case, but a scary case, potentially. And I know that the White House is considering an executive order so that you folks could start to approve these new models as they come. I know that the mythos piece has gotten people very anxious. How anxious are you right now?
Well, first of all, the White House, nobody has an idea that we should do something like bring in a giant new bureaucracy to approve AIs. And what's happening right now with Sean Cairncross and Scott Bessent, and Susie Wiles is coordinating as well, is that the government and private sector actors are working very, very carefully to make sure that the models, before they're released into the public, aren't going to cause an extreme amount of harm. They're keeping the American people safe. And so that's what's going on with Sean Cairncross right now. And whether we end up having an executive order or not, or whether just the current system is working well enough, it's something that the president will decide going forward. But I can tell you that they've made a huge amount of progress in the last few weeks, because there's been a sort of all of government, all of the private sector approach to think through how do we not only address the mythos situation, but future situations that will perhaps happen now and then, because as the models get better and better, there'll be new things we didn't think of that we have to keep an eye out for.
Well, that's what I was going to ask you about. I don't know if you listened to All In, but David Sachs had a comment about something I had said, and then maybe a comment about something you had said, which was a comparison to potentially the FDA And I was going to mention, I also interviewed Dario Amodei last week, and he from Anthropic, and he said he would prefer, instead of the FDA, he said he'd prefer something that looks a lot more like the National Transportation Safety Board, insofar as a group that effectively looks at things in advance a little bit, but a lot afterwards to some degree when there's a problem. What do you think is the right structure?
Well, I think that saying what the government is going to do, it's premature. What the government is doing right now is being effective, and whether we call it this or that, I probably shouldn't have called it the FDA. What I had in my mind at the time was just that we've got government and private sectors working together to keep people safe, and that's what happens. Like before you could put a drug out to trial, right? Then the private company has to prove that it's not going to hurt people. And so I think that the current system is working. As if I talk to CEOs every day, and they feel like they're getting the information and the help that they need. And so whether you need to do more than that or not is something that I think is an open question, and may well be that the answer is no. In the end, it's the president who will decide that.
It is. We talked about it earlier. It's Warsh Week. Actually, in Cincinnati, that means you're going to do the laundry. But Kevin Warsh is probably going to get, not you. It's going to be Warsh, but Jay Powell is sticking around at this point. How long does that last? What's the off ramp? What finally happens in your view, Kevin?
Well, first of all, I'm really thrilled that my friend Kevin Warsh is about to be confirmed. I think there's an underappreciated reason why markets are doing so well, that there's going to be a change in leadership at the Fed, and the leadership is going to be more level-headed, less prone to creating political conflicts that are different from the charge of the Fed. And so I think in the end, Kevin will talk to Jay and see what it takes. But again, where we are is that the Inspector General of the Fed is investigating the building situation. And so it's not like the White House is disrespecting the independence of the Fed. It's the Fed itself that's looking into it. And I would guess that the off-ramp for Jay would be if the Inspector General's report comes out soon and he's happy with the results, then I would expect that he would leave.
Would you expect or urge the new Fed chair to cut rates like the president wants? Now that we know that in recent meetings there's actually been, I think, some individuals that are at least considering the possibility of raising rates.
Well, as you know, Joe, we've got an enormous supply shock right now, both from AI and even just from ordinary capital spending. We had a March non-defense capital goods orders number of 3.3, which is about the biggest monthly number, not at an annual rate, 3.3, for a month that I've ever seen. So capital stock growth is high, productivity growth is high. That puts downward pressure on prices. But we respect the independence of the Fed, especially now that there's an independent-minded person there like Kevin Warsh, or about to be. And so I'm not going to give him advice about interest rates.
It just, with what he wants to do with the balance sheet and everything else, it just doesn't really seem possible that there's a path that we can see to further rate cuts. And I wonder, does the president hold that? I'm not going to ask you to speak for him, but do you think he understands that with oil prices, above $100 for Brent, that maybe a wait and see position is necessary now with interest rates?
Well, the history of this, though, don't forget, it's an academic point, but the history of this is that we always talk about core inflation, not top-line inflation. And I can remember when I went to the Fed as a junior economist a long, long time ago, I asked, hey, we care about all prices, why are we always looking at core? And the answer was that the core price today is the best forecast of the top-line price in the future, not today's top-line price. And the reason is that energy prices are all over the place and aren't any use in forecasting future core inflation or future top-line inflation, which is the Fed's target. And so you should be looking at core right now and thinking about supply shocks if I were a Fed governor, and see through the short-term supply shock, because that is something that's like an empirical regularity that has been proven over and over in Fed studies since the 90s when I was there.
But that's what Mohammed pointed out too. He said that if it does creep into core with this week's ratings or with the next time around, would that concern you, Kevin?
Of course, yeah. I mean, we had a great core last time, and the core number is the thing that we need to be mindful of, ups and downs and so on. But right now it hasn't fed through core, and if that continues to be the case, then the empirical regularity of the energy shock being kind of a short-term shock that doesn't feed through to future prices, either top line or core, we'll have a little bit more data, but it's something that we'll have to keep an eye on.
You've made the point that we're trying to privatize the work sector. I mean, maybe we lose government jobs, but you know, if they're picked up in the private sector, that's sort of something that I think that the president has put a priority on. But job growth has definitely slowed. It was better on Friday than expected. But are we at full employment? And how does AI relate to, you know, to people seem to be holding on to jobs, not really trying to. People that have jobs, I think, are trying to hold on to them at this point. It's very disruptive, AI.
Well, what we've seen is that the firms that bring AI in, and this comes from some private data that we get after non-disclosure agreements, but the firms that bring AI into their operations tend to see rapid revenue growth and even employment growth, and it's the ones that don't do that fall behind a little bit. But the jobs numbers right now have been blockbuster, you know, more than double expectation. And the break-even job number is a lot lower than it used to be because we've tightened the border. And so 120, 130 this year is sort of like 2 or 3 years ago, a 200 number because of we don't have this massive inflow of immigrants that are working. And so these are really great job numbers. There's no sign in the data that AI is costing anybody a job right now. But we are studying the future of AI and what it means for the workforce, so we've got a big task force on that.
Okay. All right. Kevin Hassett, appreciate it. Thank you.
Thanks. Thanks, Joe.
We are watching shares of Apple and Intel this morning. Take a look right now. You'll see Intel shares are up by another 4.4%. Apple shares down by about 63 cents. A Wall Street Journal report late last week said that the companies have reached a preliminary agreement that would see Intel manufacture some chips for Apple devices. Intel shares jumped 14% on Friday. They have more than tripled this year. Currently, Apple relies on Taiwan Semiconductor to make most of the most advanced chips for its devices. And again, for the 1 week, Intel shares up by about 36%. Joe?
Shares of vaccine makers, Moderna and Novavax, gaining in the pre-market on top of double-digit gains that the stock saw on Friday, related to the latest hantavirus developments. Moderna said in a statement last week it had done some early research on hantaviruses. Novavax has a strong vaccine development program and a history of developing treatments for pathogens like Ebola, MERS, and Zika. That's the one that I forgot. You did?
Yeah. Look, I would also point out Gottlieb said that he doesn't think a vaccine would be the best way of dealing with this hantavirus strain, that it would probably be something that would be therapeutic rather than a vaccination because there are so few cases at this point.
Exactly.
Meantime, it's been a big show. Breaking on Squawk this morning, fertilizer giant Mosaic missing earning estimates in part because of the shipping distribution problems caused by the war in Iran. Mosaic also withdrawing forecasts for phosphate production, and the company saying it could cut output due to higher costs. That stock off this morning. Its low is down 5% in the pre-market, down 20% since the war started at the end of February. That is going to do it for us today. We're going to hand it off to our friends on Squawk on the Street. Squawk on the Street begins right now.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber, and Post 9 of the New York Stock Exchange. We kick off an important week this morning with inflation data on deck for the week, a Senate vote on Kevin Warsh, this U.S.-China summit. Meantime, futures a bit soft and oil's a bit elevated as the war does enter week 11, and the president calls Iran's counter-proposal totally unacceptable. Retail gas $4.52 a gallon. Our roadmap begins with the S&P and NASDAQ both riding 6 weeks win streaks as we begin this new week of trading.
Plus, we're going to continue to watch that incredible move we're seeing in so many of these chip stocks, or at least when it comes to Intel and Micron. Yep, they're rallying again in the pre-market. Both names have more than doubled since April. We'll take you live to Oakland as well. That is where Microsoft CEO Satya Nadella is expected to take the stand today. It is the third week of the Elon Musk versus OpenAI trial.
Let's begin with the market's record run here, thanks in part to the AI trade and earnings optimism, Jim, even if it is highly concentrated in semis right now.
Look, no one's ever seen it like this, okay? So I have a 2x DRAM to start today. Thank you very much for that. where you have this, let's say, you have one DRAM index, and I'm looking at the index, and I'm saying, holy cow, this thing is just chock full with what's red hot. You see that NVIDIA is the donor to Intel, to AMD, Qualcomm in particular, which probably makes no sense to me because that's like the least impacted. It is, David, almost as if taking, this is what people say. I'm not believing this, but I know what people say.
Tell me what they
phrase
say.
do they say? Taking candy from a baby. Now, that's usually right at the end when you're taking candy
when you hear
from
that
a baby.
one, yes.
I'm here and take candy from a baby.
No kidding.
Yeah.
What really happens when you take candy from a baby, though?
Well, the baby can't stop you.
No? I don't
No.
know. All right. I'm just thinking about that.
Well, I mean, like Iran, you took candy from a baby, and then they did a convertible. Like you were the loser.
That same
You
quote,
got an
that
M&M
different quote
peanut,
about
you like
babies,
plain.
like I sleep like a baby. Robert Gossetti, the old CEO of Coke. Well, I wake up every few hours and I cry. Remember that one? So I was just thinking about. I love that one.
I just to bring it back to the material, there is an unreal nature to what
This is unbelievable.
Yeah, it is.
These moves are incredible. Now, things have changed that quickly.
Okay,
I mean, we're in such a dynamic
so Micron maybe
that your view of Micron is, well, now it's worth 3 times what it was worth.
Micron might be
only
worth 10
a
times.
handful-
Maybe it's worth 10 times earnings. 12 times. We don't know what they're going to earn next year, so we just keep buying and buying.
Yes.
Intel's lit boo, and the fact that he got Apple, which, by the way, everyone knew he was going to get Apple. This is another one, David, in terms of
This one's gone up 7 times on the same news.
Here's some more
right?
candy from
7
a baby.
times on the same
You know what?
news.
This isn't Canada. This is fish in a barrel. I asked Tim Cook about the Intel contract. He's but the reason I asked is because everyone knew. So then they announce it, and the stock goes up 25.
I know, it's my point.
25.
It's gone up
That's
any
fish in
number
a
of times
barrel.
on the same
That's a
news.
machine gun.
Okay,
Using fish
and
in a
what
barrel.
is this reminiscent of in your long experience? Because I had somebody actually today saying, "Oh, it's not the late '90s." To me, it reminds me of the cellular stocks in the late '80s.
In the 80s, there were these stocks where we used to go. We had a band. We had drummers, and we put hats on. It was Digi. That's what we got here. And it would be like, Digi, take Digi, take Digi, take Digi.
You're referring to digital equipment?
No, it's Digi System, it was such a joke.
What was Digi Systems?
I don't know. It was like
that.
the DSC Communications.
Okay.
It was DSC Communications, of which we knew that it was in the communications business, and it had the letter D in it,
And that's what
which
you
was
knew.
about all you needed to know. And we would go Digi, we put hats on, and we had drums, and we had a little horn.
All right, so now we do the
and
same thing
we
with
took it up ourselves.
That has a market cap larger than that of Exxon's. Micron is approaching.
They're having a better year than Exxon.
Micron's approaching what, 800 and something billion?
Why not?
SK Hynix is going to get to 900 today. I
SK
think.
Hynix, when I was at GTC, there was a fantastic SK Hynix booth that had SK Hynix. I'm not kidding. This is high bandwidth, and no one was there listening to them. So I came over to them. I said, "What are you guys up to?" And they said, "Well, we're I don't know, like 500. We're probably going to 1 trillion."
Well, you mentioned.
And I Googled. I didn't even Gemini it. I mean, I don't know.
You mentioned the DRAM ETF. Yardeni over the weekend calls it the AI11,
Yes.
which is essentially Broadcom, SanDisk, Western Dig, Micron, Marvell, TSM, a bunch of others, basically trouncing the Mag 7 for the year so far.
But Broadcom shouldn't be in there, but the others deserve it. And I saw Marvell down badly this morning. I don't know what that's about.
If you don't, yeah. I mean, listen, if you just bought this stuff on March 31st, you're up multiples, right?
Well, there are.
Even the
There are
SMH
people.
was,
There are people.
Yeah, I'm sure there are.
And they're really smart and rich.
I don't know how you, the SMH was 362 at the end of March.
Broadcom's a
and
share
now
donor.
it's, now it's 569. I mean, my lord.
But did anyone watch Jensen at Carnegie Mellon?
I did not. I did
He
watch.
didn't say
I
it
saw
was-
Andrew at America.
Yes.
Well, it's different.
Yes.
He talked a lot about what David would talk about, which is the worry of what artificial intelligence can do.
Okay.
And he, talked about how it's good, but he also said there have to be guardrails. I said, well,
Is that different for him in some way?
no, not at all.
It isn't. I feel like he's such an evangelist.
Okay,
he
all right,
rarely talks.
I should not say not at all. It was, I understand the objections, and I do want to say that I think they can be overcome by guardrails. And it was very,
This is
incredibly thoughtful speech.
Yeah, here's a touch of what Jensen said at the commencement.
Entering the world at an extraordinary moment. A new industry is being born. A new era of science and discovery is beginning. AI will accelerate the expansion of human knowledge and help solve problems once beyond our reach. No generation has entered the world with more powerful tools or greater opportunities than you. We are all standing at the same starting line. This is your moment to help shape what comes next. So run, don't walk.
Well, that sounded pretty positive to me.
Well, they didn't put the guardrail part of the speech in.
Understood.
I mean, you talked about it.
Yeah.
He also, at the beginning, so mellifluous. He talked about how it's, look back at your moms and your dads. That's who did it. That's who to celebrate. And he said, Happy Mother's Day. And it was the same kind of thing that has won people over for years and years with Jensen, which is that little twinkle. You just always are disarmed by him because he's just so good. He's talking about Denny's for a second. He's just so he is very real, David.
He's also a great investor.
Well, I know, but I'm talking about beyond money.
Oh, well, we don't move beyond money here. For God's sakes, you're a dollar sign parading around as a
I've
man.
never claimed to be anything other than a dollar sign.
Masquerading
as a man. Yes.
So okay, so I wanted to. I mean, I had Claude just quickly put together for us.
You finally using Claude, huh?
Well, we're using Claude on Team Favor, sure. We're trying. We can't keep up with you with all your color-coded
I have
stuff.
unbelievable
every
stuff on
morning.
Eli Lilly
But we
today.
did just, the NVIDIA, the public investments alone, what they're up. On the Intel investment, by the way, by far the most.
Right.
I mean, now again, these are not, we haven't triple-checked them, but somewhere in the low 20s is where they bought their $5 billion stake back in December, and it's worth now
He's up
$28 billion. So he's up 464% on that.
How about on
And
the
this is,
CoreWeave?
Well, this goes to the thread about other income that we've gotten from some of the big hyperscalers. The investment gains in private companies is leading to some of these larger earnings estimates on the that is circular.
I think, but remember, so he gives money to Michael Intrater, who's here, all right, and he saves the deal basically, buys some at 40, and then he comes in and buys some after, like what did he pay 80 for it?
Yes, 87.
And what a
and
fool!
Funny,
Hold on just a second. It's 113.
I know. I don't have the original investment for the IPO.
At 40, he had 250 million.
Yeah.
But I look at it and I say, who doubts this man? I mean, I remember when he made me go to the Nebius booth, and I felt so bad. It was like, wow, what a schlub bunch of guys.
By the way, you at the booths. I mean, that is a great tell. Whatever booth you go to that's empty, this thing you go to, you should just buy the stock.
I like to go to booths.
You should just buy the stock.
HPE,
You've been telling the story.
HPE doubled.
Nebius, and then it was about Hynix, and
SK Hynix, yeah.
Go to the empty booth.
They had potato chips there.
It's foolproof.
So listen, we got it. No, look, you go to. Here's what happens. You go, and you're often the only person at the booth, and you're talking with the guys. They like the show. In Korea, our show is very popular. Okay.
Of course.
And they're all saying, so tell us what it's like to work at CNBC. And I say, no, come on, you talk about yourselves. And they say, well, look, we think we're going to double, we're going to triple. And you're like, who are these guys? Like the Nebius guy. They were empty. It was like, I kind of go up to Nebius. And I said, you guys Nebius or Nebius? I said, depends. Depends who's talking.
To back up a minute, in terms of the chip shortage,
The stock
which
was
would
at
seem
12.
to be somehow or at least reflective of, you'd have to believe, the moves in these stocks, right? That we're simply not going to have enough.
We do not have enough, and they
it's
get
two
to
different things.
They get
memory, and it's also CPUs.
Right.
We haven't actually put a.
No, we haven't. But the DRAM
When you heard from Lisa Su last week, or you heard from ARM last week as well, GPU to CPU ratio in the data center now as a
Just
result of
way up.
inference is like 1-to-1 as opposed to being 8 GPUs for each
And then there's the
CPU. So you
right.
got that side, then you got the memory side, and that's more MU. That's SanDisk. That's all the names, the other names we've talked
Now
about as well.
ARM's going down.
All of it going to inference in part, and the enormous needs that have taken place or gone up enormously, I should say, as a result of the tasks that are being done in the data center.
We had Renee Haas
The
on
growth of
from
agentics.
ARM Holdings, and he cannot get. He talked about how he's going to have this agent business and he's doing himself, and he thought it was going to be $1 billion, and the stock started creeping up. It's about 230, and then he said it's going to be 2 billion, and the stock went to 260 right there. And then it pirouetted at 263 and went down to 217 because he said he didn't have any chips to show it because Taiwan Semi sold out, and now it keeps going lower because Taiwan Semi sold out.
Well, it takes a while to build a fab. Micron's building some big ones up in upstate New York.
Yeah, that was all part of the CHIPS Act.
Yeah, yeah. I'm going to. I'm going to out there to Idaho. See that fab.
Well, that's that huge development.
That's the biggest plant.
By the way, Jim, the SOX is 60% above the 200-day. We haven't done that since March 2000.
They repealed the 200-day. They repealed the 200-day. No, it's amazing. Look, and yet I talked to someone who's a big holder, and he was like, while I was on the line, he bought $1 million. He says, just that, buy $1 million micro. And then they went to the DRAM.
No,
the DRAM, the ETF that took in $1 billion on Thursday, says it's undervalued. Because if you look at it, got Kiox in there, and Kiox is very cheap versus SanDisk.
Yeah, and now you said a 2x debuting as well, a leverage DRAM.
That's what we need.
Yeah.
How about 3x? You know, there's like
We're not
Kalsi's betting where Cerberus is going to open. There's like 50 is the lie Kalsi says there.
They've raised the target there as well.
Well, Kalsi raised the target.
Right, that's the accelerator chips, somewhat similar to Grok, which was not bought,
Right, but not
bought by NVIDIA.
Licensed, but not as good as NVIDIA. But who cares? NVIDIA is a source of funds. We sit here and we talk about NVIDIA. Stock goes down every day.
Cerberus coming public on Thursday.
Yeah, later.
Dramatically underperformed the other players.
Yeah.
And despite the commencement address.
We'll cover more of this. We do have a downgraded Delta today, which is part of this conversation.
Oh, that was fascism.
Of course, obviously. Up next, we'll go live outside the courthouse in Oakland as Microsoft Satya Nadella is expected to take the stand in the Musk versus OpenAI trial. There's a look at futures. Stay with us. Microsoft's Satya Nadella is set to testify today in week 3 of the Elon Musk OpenAI trial. Our Kate Rooney's outside the federal court in Oakland, California with more. Morning, Kate.
Hey, Carl, good morning. So yeah, today we do expect to hear a lot more about Microsoft's role in this legal battle that's been playing out. So, Satya Nadella, as you mentioned, slated to testify later here in Oakland, where we are today. So Microsoft has been a central figure in this dispute over OpenAI's transition away from its original nonprofit structure into what is now an $850 billion AI giant. Microsoft is a co-defendant in this case, accused of aiding and abetting what Elon Musk alleges is OpenAI's breach of charitable trust, as well as unjust enrichment of some of its top executives. So lawyers for Microsoft say that its role was an innocent, essentially a neutral commercial partner, and then both OpenAI and Microsoft deny any wrongdoing. In this case, they say Elon Musk is basically a disgruntled competitor at this point. All this does...
No, you're full of shit. They don't like Elon. They don't like him, period. Good morning, retail traders. My name's Washboardjim. I'm the thinking strategist and founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns, moving averages, and being in the now. And as I look at the SPY, we're already in an inverse head and shoulders, right off the orb, which is now support, which was resistance. Trump rejects the Iran deal. Got a resistance level on AMD at 472. Keep an eye on Google. I'm eating cucumbers. Tesla broke resistance last week. Trump meet in China. What's Baba? JD's up this morning. China. Not in minutes. I'm gonna go make my coffee. Got my good coffee coming in today. A week seems like a year. better not change the date on me. Oh, Arriba! Today at May 11th. At 9 p.m., are you kidding me? I ain't waiting that long. I'll be in bed. Nothing better than a good cucumber with zesty Italian dressing. La-ti-da. Well, darn, it's been what? 12 days. We'll pull back on Tesla. Oh, wow. Ocean Eden Bay, Ocean Coral Springs. IWM double topping. This is what I talked about in my video over the weekend. Actually, it's more than a double top. Well, it's a double top. Woo! And here we go. SPX opened right up close to support. Now, let's see if the Iran deal not going through makes a difference today. Oh shit, where's my platforms aren't up? That ain't cool. Damn it. There I go, I missed out. Well, I have my platform up. My bad. Well, there's the resistance on SPX at the 100, 200 EMA. Today's winner is Intel again. Jeez, man, they're really on this one. HIMS is up 82.91 cents. STX is up again, 23 bucks, 25. Look at that breakout. 3 white soldiers on the SPX. Today's the 11th. Puts 63.80s. Or the 63.60s first thing this morning. There's 3 white soldiers on the SPY and SPX right here. 330 on the put. Glory, glory, hallelujah. We're thinking spy. We were thinking spy, but damn, I didn't have my platform up. Now I'm thinking put. It's getting a little bit too far out of the money. I'm going to go get my coffee real fast. Yeah, I jumped on that. I'd be out of the trade by now. AMD up $10. SPY's about to hit my resistance. What about now? Hallelujah. Glory, glory, hallelujah. Glory, glory, hallelujah. Any cleavage on today? No. A day without cleavage is a day without sunshine. We're at support again. Yeah. Stays bullish as long as we stay above the 200 SMA. Where in the heck? How's Toast doing today? Still respectfully bullish here. Now we have a symmetrical flag. It's called a pennant flag. I'll show it to you. We led out with 3 white soldiers, still bullish, respecting the 200 SMA. Now it's got a symmetrical flag. So we're getting ready to squeeze, if you know what I mean, baby. That's called a pennant flag. Come on. The puts are now at 310. The video is up. SanDisk is pulled back. You got Apple pulling back to double bottom. Glory, glory. Going to get in the kitchen to get my coffee. Does AMD need to cool off a little bit? That's the question I'm asking today. I have 419 as a solid support, but we're coming down to the day low here. Pay attention. I'm speaking. The video. Don't forget about me. IWM just broke resistance. SPY bouncing off the 9. We have a new high on SPX. Now I'm going to lower the put down to 73.75. New high on the SPY. We're coming up to a double top on the slash ES. Slash ES double top. About time for the puts. The 73.75s are right now at $3.70. The market doesn't know what to do. I know what to do. Yeah. How come them ain't white? I protest. Them should be white or green. Where's my confused? Very confused. Glory, glory, hallelujah. Now we're going down to the 73.90s. Market's being a badass today. 3 white soldiers, pennant flag, 3 white soldiers. $74.20s are from $185 all the way up to $8 on the calls. Puts aren't moving at all. If I got in them, they wouldn't be moving right now. I ain't trading them. They're not moving. I'm gonna go get my coffee. Oak. We're back at support. 74.20s at $7.50 right now. $7. Back to the third crow. Not in them yet.
Joe is someone who respects technicals, respects momentum, but also pays attention. When you see the market shift from how it was reacting to things, I mean, you go back to March, crude oil mattered, and it mattered a lot. It was the trade. It was the linchpin.
Hey, don't let me educate you.
April, but clearly.
But are you saying that we're not in the now? Because this strategist is.
How about choice C? A little bit of both. I mean, look, it's hard. You know, I just heard your last guess. It's hard to stay long that AI trade right now when you see these parabolic moves, and you know that seems to be what markets are pricing. Our markets looking a little bit too sanguine and seeing past some of the potential pitfalls that are out there. Absolutely. You know, one of the things today
that I kind of keep an eye on is in terms of kind of retail activity. What are we seeing? With
We missed the run.
and there's a lot of upside call.
Randy, we pulled back to 2430
There's a couple ways. You know, the first one I would look at is
on Toast, T-O-S-T. Are you here, Randy?
people are continuing to change.
Randy.
They've been rewarded for doing that. So at this point, that not quite yet. The other way I look at it too is that investors are becoming a little bit more savvy, and maybe they're trimming some of those stocks, looking for kind of stock replacement strategy.
The OSC, the other one.
Calls, so reducing some of that.
What is that other one?
But yet still participate in the upside. So that is interesting to see. I think a couple other things that that
OCS.
Some of the momentum indicators from a chart perspective are showing that
No.
the new highs. We're starting to see some of that momentum slow down a little bit. I think that that's something to kind of keep an eye on.
Momentum slowed down a little bit.
Alex, that's the key. Markets can go higher, they can stay in these parabolic moves. But
Chewy.
when you do get a catalyst, that's where you need to be aware.
Here we go. Now we're dropping.
For, what could be a quick turnaround.
Prepare ye in the name of the Washboard Jim. We don't need fearmongers today. Okay? We've got JD.com pre-market on Tuesday. And we got Oklo pre-market on Tuesday. And it got Alibaba Wednesday pre-market. Oh, they changed them. Cisco Wednesday post-market. Applied Materials Thursday post-market. We finally broke support. Hike. I'm watching the 7420s. I'm going to jump in this thing. We got 3 black whores right now. See, fundamental traders are freaking out right now. This is not their... They know that the AI sector is way overbought. And some of them are a little too afraid to jump in. They're not used to this kind of market. And they're a little biased, too, in their politics. Right about now. I don't want to get caught in this thing. $74.20's at $5, and I missed it. Damn it! Let's see if I can get it. I'll get 520. So tell me if I get one at 520, I leave one open for a dip. Market's kind of, momentum's kind of slowed down quite a bit here. Got a doji. There we go. I missed it. $50 right there if I got 520, and I could have got it 70, 60. I mean 80. God darn it! There it is. Right there. $100. AMD. I'm going to tell Vegas to watch AMD here. May 15. God, they're so expensive. They are expensive. The 500 strike at 3. Yeah, man, they're just too expensive. We got NVIDIA pulling back here at support. And we got Apple broke out. Well, I'm thinking I'm going to be patient today. Wait for the dip. I'm looking at Grand Palladium Lady Hamilton. It's a huge resort. I get a lot of exercise on that trip. What am I looking at? Well, they didn't have too good earnings. They missed on their earnings. Baba. They got earnings coming out on Wednesday. SPY looking to bounce off the 2-minute. You think so? Bugs became quite the trader here lately. We're on the 21 or the 9 on the cloud. I just don't see the volume. I'm going to set an alert on the 21. Jimmy's going to be collecting for his vacation pretty soon, so everybody get your big belts out. I really want to live this one up. It'll be the last one I take while I'm a working man. I really want to live this one. Good morning, Bobby. Good morning, Arm V for you. And good morning, Matty. Matty mate. Might book it tonight. September will be the month to remember. Let's see what the 1 minute says on that. I'd have to raise that support up a little bit for the 1 minute. That's pretty good dip. I don't know about that. Oh, that's up here. Duh. Well, we've consolidated for 8 minutes. 9. What's penny stocks doing here? BTBT. Whoa. Press conference. Digital announces appointment of Daniel Kennedy as head of investor relationships. Don't blink. AMD, Jimmy called the reversal. SPX trying. They're still kind of just hovering off the 21. On the SPY and the SPX and the IWM. We got a symmetrical flag on the QQQ, a 1, 2, 3, a 1, 2, 3. Hello, my name's Gloria. I was going to ask you a question. I've been taking hormone treatments, so my voice is kind of clogged up right now, but you were getting ready to talk about something, Jim. What was it? Shit. Iran wants sovereignty over the Strait of Hormuz. You know what? You don't get what you want. It's not your water. Blow them off the map, Trump. I forgot what I was going to say. I know it was of some importance. Regetta's up today. RGTI. Oxy's up 171. STX is huge, man. I don't know about this. They were pumping this last week. Seagate. And Friday it pulled back pretty hard. Let me see how much these things are. STX put. May 15. Oh, God. These things are so high. I ain't spending no $2,500 on a trade. We came back to the 21 here on SPX. I can only afford SPX. My eyes have seen the glory of the coming of the Lord. IWM triple top. There we go on the QQQ. There you go, bug. $5.20 to $6. There's your $100 bill right there, 520 to 620. %20 gain. Got a double top coming up on the SPY and the SPX. Boom. Nice call. Hallelujah. This Apple was a pretty interesting call. We just come up to the 200. SPY new high. There's 640 to 750 right there. Now we're just right under the money on the SPX. Very nice.
The House, Democrats are set to lose potentially 9 seats in the House. Republicans are set to gain 7. There are now 9 potential toss-ups.
Damn it.
And we are looking at a
Chewy hit my support this morning. It bounced up to resistance right now. 50-cent move. Man, look at that. SPX. This used to be one of my greatest dancing songs. December back in '63. Worry length of time for me. Remember what a night. To know your name. I can tell you, it gives me goosebumps. I probably danced that song over 1,000 times. Your very own Elvis, or your very own BG. Sophie. Someone else was pumping up Solo. Was it Solo? No? Very nice. There's big buyers coming in. 1657 maybe? Yeah. Tesla has a triple bottom. AMD has an inverse head and shoulders. My WM getting new highs, and here we come back on the QQQ. We got 580 on the SPX. Watch it here. See if it bounces off the 50. And then we'll put another support right off the, there we go, right here. 530. Ding-a-ling. Just been triggered. That's what I've been waiting for. $5. There's the 63. Damn it. No, let's keep it here. If it comes down and hits the 100, I'll add. 3 black crows off the 63. Now, triggered. Okay, I'm done. It's got to work from here or I'm out. Late December back in 63. Let's go, baby. Ah, darn it. Ah, shit. Two at 330. We hit the 200 right here. No. Dang, inputs would have done well. Come on, break it. Make me some money. We're at 420 now. I can get out of this trade and be happy. Might just sell them right here. Get out of it. 450. Up to 470. It's 490. How's he do it? Well, I'm fairly bullish for one. The puts would have done real well. We hit the VWAP on the /ES. That would have been the one to wait for. How's he do it? My best friend became the 200 SMA. Jimmy was worried because he was stuck. Iran wants sovereignty over the ocean. They can't have that. Cannot allow a terrorist group to have it. It just can't happen. Well. Big Booby Marley. I was going to buy, I didn't have time, but I was going to buy, buying today was my plan. QQQ breaking out. Oh, don't like that. Nile's moving. That would have been a good job right there on the QQQ on that dip. Triple bottom. SPX nailed up 200. We had the 200 EMA on the SPY, and the IWM pulled back to the 63. Well, got one good trade in. Google had a double bottom here on the dip. AVGO, nice little wedge. Coin had a double top from the bottom. Beautiful. Q got a little bit more out of that. We got a head and shoulders on the SPX. We'll be making lunch here shortly. Sophie had 3 white soldiers and pulled back. Well, today I'm not going to overtrade. We got SPY with a head and shoulders support. I'm going to still keep it at 737.89, but I'm going to put my alert at 738. Alert set. And I'm going to set my alert on, what was it, SPX above the VWAP for a double bottom. No. Type in double bottom. Oh, triggered. What got triggered? /ES. What? I don't get it. Bind. One of these alerts I'm not liking too much. We're at the pre-market low. Maybe that's why it triggered. We'll find out here real fast. Let's see where it's set. Today it took a lot of patience for me to get my trade in. As I watched, I didn't have I think my biggest mistake was my platform wasn't set up this morning because I was getting ready to buy the call and I said, damn, I don't have my platform up. And then once it took off, I just kind of had deer in the headlights. But I was going to get in it. So I told myself I'll just wait for my setup. And I got in early, of course. Tried to jump in on it on the 3 black crows and end up being 4. And then it ended up having another knife to the 200. So I had to average in 3 different times. And I doubled down on the last one, which gave me a good good average. And right there we bounced off the 63 again, where I took the other trade. So I'm going to go in there and make my salad and have a couple of sardine cakes. Man, I went to get sardines this weekend and only had one on the shelf. I said, jeez. At least they left me one. I'm going to tell her. The only issues I see, I got everything tidy up. The only issues I see is the exit lights where the taxpayers go. And personally, I think one of the employees was playing around with them and broke them. I don't know if I should say that or not. Better not. And that one air conditioner, and the back of the building not getting mowed. Boom! New high. $5 to $7. Dang. There's another $130 there. Trump's supposed to help. What'd he do? What was the post? Very good. The people's president. That'll piss off the Democrats. They want to tax you to death. Head and Shoulders got the shoulder line support now. Prepare ye in the name of the Lord. That or I should go make lunch. It's a tough decision, but somebody's got to make it. We got a triple top on the SPY. And a triple top on the SPX. It says it extend to the left, cancel the right. SPX triple top. I don't know how to do it. You know, I didn't see any bears out this weekend like they have been in the past 3 weeks on social media. I think they all got embarrassed. I mean, they were whopping off the Buffett theory finally for the last resort, not this last weekend, but the one before. I didn't see one bear out this weekend. NVIDIA's come back to life. That's probably pissing off the liberals on CNBC. Magnificent Seven, the only one that looks green is NVIDIA. Google's down $6. Microsoft in a lawsuit, down 5, almost 6. Meta down 8. Meta, watch Meta. Meta and Google. We got a symmetrical flag on Google and Meta. Meta's at 600. Higher costs are rising AI's profit bar. Higher costs are raising AI's profit bar. What? Broadcom turns to private credit for record $35 billion financing. Cloudflare, Matthew Prince says company's name is too long. What? What the hell's wrong with Cloudflare? That don't make no sense. Marley's got a red dress on. Damn.
From Key Advisors Wealth Management. It's great to have you back on the show. Now, our rally continuing. You know, we thought we would have this wall of worry that would stand in its way, but we're making new all-time highs.
I didn't think it.
On a near daily basis.
You thought it, but I didn't think it.
I've been managing assets for 28 years. This is the strongest and most resilient market I've ever seen.
Exactly.
And what we've told folks is don't fight the trend. And the trend continues to be bullish, and you continue to hear people.
If I get any credit at all, I want to be noted for how bullish I was when everybody else was about ready to shit their pants. If I get any credit at all, that's what I want to be remembered by. And this guy says it. Now they're coming out of the woodwork. The wall of worry. I never saw a wall of worry. None. Just a little bit. But if I want credit, I want that to be it. Out of the 22 years that I've traded, this is the most resilient and bullish market I've ever seen in my 22 years of trading. Besides the government printing tons of money, Obama did it, Biden did it worse, twice as bad, in 4 years, and still printed twice as much as Obama did in his 8 years. I want to be remembered. Besides the government trying to dictate our economy, we got a marketplace finally doing the work, the bidding that needs to be done. And I've been waiting for that for years. I've always believed small business was the leader of the pack. And it's stupid. Well, I don't know if it was Becky Quick bashing small business the other day really pissed me off. Well, they don't know any better. It's just part-time jobs. When it's a small business, it's the foundation of this country. It's not the big corporates that lay people off and we don't near take the profit that they take. I used to have a real nice profit in my business, and then Obama came in and ruined it. And then Biden made it worse with 30% inflation on my business. I couldn't take it. I was going nuts. And I didn't get no bailout. But that's if I had anything to be blessed for, it's being. And I've been following that map for years. When people get unwound and and when people get greedy, like they're going to start getting greedy soon, and this market's going to reverse. Capitulation, I called it back when we were at been a couple of months now. The Brits are going home. When they start realizing, like Marley just said, she's been a wall worry every single day, and so is CNBC's a lot worse. They've been at it for 2 years, ever since the tariffs came in. Tariffs didn't bother me one bit. It's the inflation that I had under Biden regime and there's no tariffs. We were giving away shit. That's what killed us. I've debated people before. I had one guy tell me that one of my best friends I traded with that just loved my trading and all of a sudden went sour grapes on me. I got to talking about this map. Let me show the people on YouTube. When everybody's greedy, that's when you want to bail out. When everybody's in fear, that's when you want to buy in the market. And I was calling out capitulation, where you need to start owning a few positions. Discouragement came in, and then the fear, the total fear. And then all of a sudden, we're sitting back up here at optimism again before you know it. Now, I traded with a guy for years. He said, that's only happened twice. And I said, what? It happens about every single year. Sometimes even more. Depends on what time frame you're looking at. So we're in optimism. And they're starting to come out and talk like that. And then before you know it, I'm going to be buying puts again. But capitulation is the place where you want to figure out in the market. When the fear really starts. A panic came in, with the despair and fear and because of Iran. And all this time I was very optimistic in buying the dips. Then capitulation came in, and they're still, really freaking out. And that's when I told you all, I said, pull up your top 5 stocks that you trade that you really like, that you've done well with, and see where they are and see if they're worth buying. Now we're back up here in optimism. And CNBC and Schwab, since Marley came in, she's got, she brought a little bit more negative because she listens to analysts. These people have been fundamental traders for years. They're not chartists. That's just my opinion. But I like to stick it out there. So now we're coming back down. We're at the shoulder line of that head and shoulders. I missed it. Well, I'm going to wait. I'm going to go in there and cook. That vulnerable. Vulnerable.
Difference when you have someone that actually cares.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock.
We just watched this.
I've always seen as a force in our family be vulnerable.
Vulnerable.
Had a stroke? Yes. Now
That ain't funny.
almost daily, I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any
I have been there.
have. Makes a huge difference when you have someone that actually cares.
When are you going to call again? You ain't called me in a couple weeks. You been vulnerable?
Welcome back to Trading 360. I'm Marley Gator.
God,
It's
she's
time for
hot.
the big three. We've got 3 stocks, 3 charts,
Woo.
and 3 trades for you. Rick DeCat will take us through the charts today. Here to take us through the trades, Tammy Marshall, analyst at Elliott Wave Trader. Tammy, great to have you back on the show. I would love to start with your thoughts on this rally, the seemingly unstoppable rally that we've been seeing
Duh.
this month.
Well, hello, Marley and Rick. It's so great to see both of you again. Thank you for having me on. You know, it's been crazy. We are very extended. What I like to look at is target extensions off of previous lows, and we are meeting those target extensions on SPX Cash, and we've already met them on NASDAQ Cash. So very extended here, definitely looking for a pullback, but when we do pull back, what I'm looking for is a good opportunity to get bullish again.
All right, I'm wondering if this first
I am
trade
bullish,
has anything
baby.
to do with the slight pullback we've seen, because we're talking about ARM Holdings, and they've had a really nice run year to date, up about almost 100%. But in recent weeks, we're starting to see a little bit of a pullback in this name. So take us through ARM Holdings and why they're part of the big three today.
The lady in red.
Never seen you looking so lovely as you did tonight. I've never seen you shine so bright. I've never seen so many men ask you if you wanted to dance. Looking for a little romance, given half a chance. I have never seen that dress you're wearing. All the highlights in your hair that catch your eye. I have been blind, lady in red is dancing with me, cheek to cheek. There's nobody here. It's just you and me. It's where I wanna be, but I hardly know. There's beauty by my side. I'll never forget.
The lady in red. Lady in red. Giving me goosebumps, baby. It's another slow dancing song that I used to dance with.
Never seen you looking so gorgeous as you did tonight. I've never seen you shine so bright. You were amazing. Never seen so many people wanna be there by your side. And when you turn to me and smile, it took my breath away.
Jimmy called it off the 63, off the red line. Lady in red. Dancing with me, baby. Cheek to cheek. You still got it. Get off me, chick. Lady in red. Oh yeah. Red. Yeah. Man, $5 to $6.40, but I didn't take the trade. Again, of the 2 minute, 3 black crows with a hammer, and on the 1 minute, that's with /ES.
Here, 161.80 was our high point that we saw. We had a decline after earnings. We filled the gap here near 106. From there, as Marley said, we have transitioned into an upward channel type shape here. You could draw one boundary line going across the lows. You could try to duplicate it, extrapolate it, put it along the highs, just give you a general idea of where you might potentially find future support and resistance. Certainly not a crystal ball that tells you where things are going to wind up, but a tool you can keep in your repertoire here to kind of gauge where you might find these potential areas of support and resistance. Another area that stands out to the upside is the 140 level, because we did have that high point before a gap to the upside. That's also roughly where we had our low before the breakdown after earnings. So that stands out from a technical level potentially as well. When we do look at our moving averages, in this case, our 5-day EMA is around where we hit our opening and lows here. Roughly 127.47 is where that darker blue line is right now. I do notice that our 21-day EMA in teal near 121, pretty close to where you might draw this boundary line as well. So if you do break down both of those concurrently, that could be an interesting confluence tipping point to watch out for. RSI, you could draw, again, a upward trajectory here. We are above the 50 midline, coincidentally right around 59 as well, just like our last chart here. So more geared toward the bullish. end of the spectrum. When we examine our volume profile in this case, we are at the point where volume really starts to thin out, which makes sense. We haven't had very much time to accumulate any trading activity above these levels near 130. Small amount of activity up here, matching up with those old highs. Really the bulk of where we saw much of our noteworthy trading volume here between about 90 to 110. The point of control comes in near 96. Similar to our last chart though, I do want to point out these heavy volume spikes once again during these big swings here. So something else to consider, that the spikes often came in tandem with these big gaps. So interesting technical picture once again.
All right, and Tammy, as we look at Rambus and with that technical setup that Rick just highlighted for us, how would you look to trade this name?
On Rambus, you could buy a call debit spread, use the 140, 145 call strikes. This trade goes until the 18th of June, so it gives it time to work. And if you can get filled around $1.40 or so, I know that it's already up around $1.70 now, but if you get filled around $1.40, you could risk around 1 to make 3.
All right, and then this last one, Rick and I were laughing off camera at the commercial break about when SoundHound rebranded itself into SoundHound AI and just put the AI on the end of its name. But that's the third pick that you brought to us. So take us through SoundHound and what you're seeing with this name.
Well, with SoundHound, what I like about it is it is testing the 50 simple moving average, and I really do like it when I see something testing one of the, either the 50, the 100, 200 moving averages, and it also has a cluster of Fibonacci price support. So that setup zone is going to be $7 to $8. Now, I'm looking for it to run up over about $20. So right now you do have that defined Fibonacci risk, $7 to $8, and I like it because it's a low price stock, so more people could potentially participate.
Yeah, and only trading about $8.48 right now, but SoundHound down about 4.5%. Rick, as we look at this clearly very volatile name here, what are you seeing in terms of the technicals?
Yeah, to be sure, it may not really look like it at a glance, but this low that we established here, 583, we're up almost 46% from that point here. So definitely some big swings in this name. And what we do see as well, this level here near 990 roughly, a notable low area here. Once again here, a breakdown point, and that's about where we topped out recently. So that stands out as a potential breakout point. To the downside, similarly, we tested this green line multiple times here near 726, resistance once more, and then breakout point as well. So that gives us
SOUN.
Horizontal boundaries to watch out for. The broader picture, though, you could draw this.
Who's picking their stocks? I want to slap them.
The highs by that measure was pretty close to some kind of upside breakout. But really the shorter term trend that stands out more is this upward trajectory here. Again, you can also kind of draw a parallel line to give us a channel here. Depends on your perspective. But really what you would be looking for if you were bullish in this name would be a push above not only these recent highs as we said, but also that general broader, longer term resistance area that we identified a moment ago. So now in this case, our moving averages are a bit of a different picture. Now we have them clustered much closer together. Our teal 21-day, our gold 63-day represent a month and quarter. Those are right on top of each other near 830, 840 or so. So while that also does line up with our trend line, it gives us another even more notable confluence than we discussed previously here. So if we do hold firm at this level, that remains as a notable supportive point then once again. Meanwhile, too, our recent highs that we saw near that 1013 level, those line up with our 251-day EMA in orange, our yearly longer-term EMA. So that, again, becomes even more notable as a possible breakout. So RSI slipping a little bit here, but still in bullish territory. Our trend line has been broken. Our green upward sloping line that we established along a few points here now has been left behind. But we, as I said, remain above the 50 midline. Finally, when we look at our volume profile study, we did have some notable activity here in this area between about 750 to 850. If we start getting a bit further to the upside, 10 to 13, another heavy trading range here with our point of control near 11, standing out as the most significant area where we would be looking for potential consolidation or slowdown.
All right, and right now we are seeing SoundHound still a part of this post-earnings pullback down about 4% today, trading at 852. too. Tammy, I want to thank you for being with us for Victory today. Tammy Marshall from Elliott Wave Trader, and of course Rick Ducat for always breaking down the technicals for us. Coming up next, we've got our disruptors. We'll take a look at Intel as shares hit another all-time high, its fifth one in a row, following reports of a partnership with Apple. Trading 360, we'll be right back. Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are. Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Sometimes, you know, you could have done better. The same goes for when you invest. Level up and invest smarter with Schwab.
Morning movers, be the first to find out what's shaping early market action. Check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Schwab coaching is concepts brought to life in the real world.
It's absolutely world class. We have coaches who have been in the industry, around the industry for a long time.
We have different formats because people learn differently at different times. We have webcasts running through YouTube all day, every trading day. We've got events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
How incredible was that? And it's free.
Stay connected to what moves the market. Download the Schwab Network app and stream anytime wherever you are.
Trading at Schwab is powered by Ameritrade, giving you even more specialized trading support. Connect with the Schwab Trade Desk, our team of passionate traders ready to tackle your trading questions, no matter how complex. Plus, get 24/7 live help and access support by phone, email, and in-platform.
Hey Bob. Hey Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, that's true?
Yes. Now we're in the car together almost daily. I started to realize what can I pick up from my dad. He's been with Schwab for a long time.
Jim, my financial consultant, I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it. To leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years. Through purchasing of houses, opening up our business, having children, they've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The two grandchildren planning for their college educations. Someday it'll be their turn.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Welcome back to Trading 360. I'm Marley Caden. It's time now for the Disruptors. George Tillis, our senior markets correspondent, here with today's company, talking about Intel rallying to another all-time high. George, on these continued discussions of its partnership with Apple here, take us through the latest news on Intel and why we're seeing this record rally.
Well, I think the record rally is really about what's happening with data centers now and inferential demands for artificial intelligence. I mean, the narrative had been, of course, GPUs with a large language model training. You need parallel processing, and that's where NVIDIA really shines. But now it comes down to the volume of tokens that are utilizing artificial intelligence inquiries, and that's where CPUs come in, and that's essentially what we're seeing in this transition from a technology stack standpoint, and we're seeing that manifest into better price action in companies like AMD, Intel, which I looked at the chart. Just in the last 30 days, it's doubled. I mean, it's pretty remarkable how this is working out or manifesting. AMD also, but if you look at across the board too, even in the mobile chipset space, Qualcomm is another one that's really doing very well in the last 30 days too. So the CPU markets for Intel are large. This is their mainstay business. Client servers also, that's in high demand. Not to mention the data center demands for their technologies, and then you add in another catalyst, which is reinvigorating the partnership with Apple. They didn't talk about which chips or what devices Apple will be utilizing Intel's chips in, but nonetheless, the foundry component of Intel's business is still quite valuable, because if you consider the major foundry technology firms out there globally, you got to include Samsung, Taiwan Semiconductor, and Intel domestically. And then on top of that, the administration is supporting Intel to help shore up their foundry position in the United States. So there's a lot of positive catalysts for the name. Then you throw in the mix that the relationship with Apple, which was tenuous at best in the past, may be reinvigorated as well with new product demand and of course chipset demand from Apple.
And we're also getting a report today from ZDNet Korea that there is a potential conversation with SK Hynix going on to be another large customer for Intel about providing some of its chip packaging technology, integrating high bandwidth memory and logic into chips, so they could end up with two instead of one big customer in a series of weeks here. But we are trading up another 1.5% higher today, another intraday high for performance so far year to date of 245% for Intel. With that momentum on its side, George, how would you look at trading this name?
Okay, so this has really been a challenge because, if you try to predict where this price is going to go, you're not going to make it. I mean, it's impossible. So what you want to do is react to the price action rather than try to predict. The stock is in a lockout rally. It's just continuing to move higher. And you can make the case in some context that the market is in this position as well. So on the daily chart, it's just going parabolic. But if you break things down a little bit and you look at the hourly chart, for instance, if you look at a 20-day, 1-hour chart, you'll see that there are periods where there's retracement. Opportunities to re-enter on more of an aggressive long position. And so if you look a little bit deeply,
George,
you can see that on the 1-hour chart, right around the 50 and 100-hour moving average, the stock seems to be trending or surfing those areas. So I'm going to play a retracement back to essentially the 100-hour moving average. So using the
100-day
20-day, 1-hour chart, which positions the stock right around $118. So going out to next week, rather than just trying to call a continuation using call options, I'm going to sell next week's expiration, the May 11-day expiration, 118 cash secured put, and you could harvest around $5 a share in credit or $500 a contract. So in essence, all the stock needs to do between now and expiration next Friday is
pull the 118 level, it could pull back to that level, like I said, which corresponds to those moving average levels. And then, of course, that premium will roll to zero very quickly. And then if you do structure this trade, you have to be willing and able to take ownership of the stock in case you get assigned shares at 118, but your cost basis is 113, which is, again, looking at the stock is about 10% away from the current price, which I'm going to round up to around $130.
Right now we're at 126.51 with another positive move for Intel, trading up about 1 1/3% right now. George, really appreciate you taking us through the latest here and also for that example trade. George Tillis, I'll talk to you a little bit later, George. Coming up next, we are going to spotlight Twilio. We'll be joined by the company's CEO to discuss its recent turnaround and its latest earnings report. That's all next on Trading 360. Stay with us.
Stay connected to the markets, the Schwab Network.
Tune in 24 hours a day, 7 days a week on SchwabNetwork.com
and on all your favorite streaming services. The Schwab Network, available anytime, anywhere, on any device for free.
How's it going? First day, so sometimes Next. Try it again. You could have done better. Please. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Trading 360. I'm Marley Caton, live in our Chicago headquarters. It's time to spotlight Twilio as shares trade near a 4-year high. Joining us now to take a closer look, Khozema Shipchandler, the CEO of Twilio. Great to have you on the show. Thank you for being with us today. Now, I'm looking through your earnings. We covered them on my show in the afternoon on Market on Close, and one of the strongest quarters in Twilio's history, a revenue growth accelerating to 20% year over year, a sharp uptick from the 7% that we saw when you stepped into the CEO role. So my first question for you, Khozema, is what is driving this sort of turnaround inside the company?
Yeah, first of all, thanks for having me. I mean, since I started, we've really been working hard to totally transform the company. So we've been working on running the company better. We've been exerting a lot of financial discipline on the company. And then on top of that, we've really been, in a very focused way, investing in the innovation pipeline of the company. And I think you're starting to see that in our results. As you noted, one of the best quarters in the history of the company. We really re-accelerated our revenue, our gross profit, and I would say in particular, our voice channel has really been a bright spot, accelerating growth for the 6th consecutive quarter in a row.
And I want to talk about that. I'm glad you highlighted that, because when you stepped in, there was significant investor pressure to improve your execution, your profitability, and you also faced activist pressure to divest your segment strategy there. But with that voice acceleration of 20% and AI being a catalyst, why did you hold so firm in your conviction, knowing that you would need that segment layer?
Yeah, there's two things there. So first of all, I'm not sure that we totally anticipated AI in the way that it's kind of played out over the last couple of years, but what we did know for certain was that that segment data asset that you referred to, it provided this critical contextual layer so that whatever channel of our company that the stuff that we provide that a customer ends up using, that it required a deep context layer to actually be able to personalize the communication on the other side. Now, as you fast forward towards AI and what's happened with voice, like there's been so many different voice AI startups that have been launching over the last couple of years. To be able to really activate their AI workloads, they depend on that context layer from Segment. I'll give you an example. Sierra AI, which is a well-known AI company, they're using our voice infrastructure, but to really be able to reach their customers in a more meaningful way, they're also using our intelligence layer to be able to personalize those interactions.
And so you also raised your guidance here for the quarter. You raised your revenue guidance, you raised your operating income, your free cash flow guidance as well. Is that reflecting stronger underlying demand, or is that more of an execution story and improved execution?
I mean, I think it's largely a self-help story, to be honest. I mean, I think, as I noted in the beginning, there are a number of areas in which we knew we could run the company better. I mean, we're very encouraged by a variety of signals that we're seeing in the marketplace, but I think in particular, I mean, we're very, very strong, for example, in our self-serve channel, right? Like, we've historically been known as a product-led growth company. We've seen real acceleration as a result of startups of all stripes, by the way, not just AI businesses, but also Main Street businesses attach themselves to our platform, get going, use communications as a means to reaching their customers, and increasingly use data to be able to do that in a more personalized way. There obviously are some AI tailwinds, but I was just looking at it this morning, in fact. I mean, the AI contribution to our revenue stack is still quite modest, and so I think we're performing well, and we find ourselves at a really interesting time where we can do better.
And so a part of that interesting time is something you unveiled at Signal here. I saw that you unveiled what you're calling agentic AI infrastructure. For our viewers who might not be as familiar with that term, what exactly does that mean?
Yeah, so I think what you're seeing with our company is that historically we've been very, very well known as being a communications utility, if you will. And I think increasingly when you talk about that data layer, when you talk about AI, when you talk about some of the launches that we unveiled at our Signal conference last week for customers, we put a lot of emphasis around what we call this conversation suite. And we really harped on the idea with our customers that every one of them has long sought to be able to create a long-term conversation with their customers. To do that, they need intelligence, they need memory, they need orchestration, they need agent building tools, and we launched a full suite of capabilities to be able to do that. And so if you're, for example, the PGA Championship, of course, is this week, they're a big partner and customer of ours. They want ways in which they can reach their golf pros in a much more intelligent way, much more orchestrated way, and reach them in a way in which the golf pro wants to be reached on the channel that they want to be reached with the context that they want to be reached. And increasingly, the chief technology officer of the PGA is thinking about how can he leverage AI as a means to go even faster, and we're a perfect partner for that kind of work set.
And as I was taking a look at some of the analyst commentary on Twilio, I came across a lot of projections that Twilio could be the infrastructure for 100 million AI agents by 2029. If that's the scale that we're talking about, I mean, you just mentioned Twilio is traditionally known as a communications utility. Should we be reclassifying you, if that comes to fruition, as perhaps a data and intelligence utility?
I mean, I think broadly speaking, people consider us an infrastructure company. I mean, one of the unique attributes of Twilio that's been around for a long time, just to contrast it, for example, with traditional SaaS-based software companies, is we've always been a usage-based revenue model. And so we've always very, very tightly aligned ourselves with our customers. And I think one of the hallmarks of having an infrastructure company is that usage-based revenue where you're matching yourself against the success of your customers. So that's one part of it. The second part of it is, as you rightly pointed out, like having that data layer is so crucial. And so I do think that a lot of investors are really starting to think about us increasingly as that crucial infrastructure layer. And as it relates to the agents, I mean, I actually think 100 million is probably underselling it, if anything. I mean, I think in 2029, which is a ways out from now.
Once I started eating sardines and 10 pounds
a lot of the external research actually shows that
off my weight,
somewhere north
we've been nothing but bullish.
That are out there that are executing human to agent, agent to human, increasingly over time, agent to agent, and we want all of those interactions to ride on our infrastructure.
And how much of you being usage-based and having a thriving model versus being seat-based is going to contribute to this projected success, both in your upped guidance and that number potentially being light?
Yeah, I think being usage, the most important attribute of it is that we only make money when our customers make money.
Oh.
And so I think forever, we've always aligned ourselves in that way because it puts us on the right side of customers. And so to the extent that you see additional AI tailwinds, I mentioned a moment ago, it's not a huge contributor to our overall revenue stack just yet. So to the extent that AI takes off even more in our personal lives, in the business interactions that we end up experiencing as consumers, I think it's a pretty material tailwind. And I think what's especially interesting is most communications are actually one way today. And going forward, this whole notion of a conversation that we launched last week, the idea is that the back and forth nature of a conversation, which is what makes a conversation, that becomes possible, and that actually drives a lot more usage for us, to be sure, but a heck of a lot more ROI for our customers, which makes it so profound.
Cosimo, we sadly have to leave it there, but it's such a pleasure talking to you and really appreciate you taking the time to highlight Twilio having a really impressive month, up more than 68% in the last 30 trading days. Really appreciate you being with us. Cosimo Chandler, the CEO of Twilio. Coming up next, we've got our 360 round. Our panel will be joining us to break down the earnings we got from Circle, a mixed report from the stablecoin provider. Trading 360 will be right back.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock. That could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Hey, Dad, I have a question for you.
Sure.
When did Granddad first start investing?
Granddad had an account with Schwab before there were branches in the area. He really started with nothing. He worked hard, and after he passed away, the torch has been passed to me, and my advisor, Jennifer, she was with me with the journey, helping with the estate distribution. The 2 grandchildren, planning for their college educations. Someday it'll be their turn.
Someday it'll be their turn.
This is Fast Market, built for traders who want more than just headlines.
We walk you through trade ideas with structure, risk management, and a focus on execution.
From options to earnings to volatility plays, we bring decades of trading experience to every segment.
With real-time insight across products and sectors, we deliver what active traders need to stay ahead. Fast Market weekdays at noon Eastern, live on Schwab Network at schwabnetwork.com.
Welcome back to Trading 360. I'm Marley Caden. Circle is rallying after reporting earnings this morning, beating bottom line estimates while missing expectations for revenue. The stablecoin company's report was highlighted by the launch of an AI payments tool. Time now for our 360 round. Let's bring in our panel to take a closer look at Circle this morning, welcoming in Sydney Armani, investor and founder of AI FinTech World Fund, and Owen Lau, managing director and senior equity analyst at Clear Street. Owen, we'll start with you. I'd love your thoughts on this sort of seesawing reaction that we saw. I was writing my notes before the show started, and we were trading lower, and now we're up almost 12%.
Yeah, I think people initially reacted to the miss on revenue side, but when they unpack the result, they realized that there are more to come for Circle. So Circle is not a crypto play anymore. It becomes an on-chain infrastructure play. Just like going back to your comment, it is going after the agentic payment. It is going after the layer one infrastructure. They just did a pre-sale of $222 million of ARC token, valuing the network at $3 billion.
And Sydney, what were your thoughts here on the report itself, but also on the reaction that we saw?
Good to be with you, Gap. Well, as help
Got a bull flag forming.
The Act in the Congress is moving forward, that's going to have an also.
1, 2, 3. 1, 2, 3.
694 million.
Sweet spot.
Base, that helps them tremendously. So we come a long way from the days of everybody has a,
Circle. Comes number 5. 5 tops. New high. $74.20s are now in the money. Is it time to rest? We got an inverse head and shoulders expansion pattern on /ES. No, actually it's just a flag. The bear flag. So let's see if we get a pullback now. Gosh, them things are good. I think adding that cilantro. I never was a cilantro kind of guy, but man, with these sardine cakes, I know the Mexicans like cilantro. I'm going to go over my watch list once I'm done eating. DPZ just hit my Domino's Pizza. Hit my support. That's been a while since I've ordered that one. Pretty good sell-off. $2.90 from $3.40. They got $2.90 for a Target. So it might go lower. Who is it? Rothschild. Kramer says he's not bullish on gold. Time to buy gold. SPX is trying. $9.20. Now I can't wait for that good coffee. I'm gonna see if they updated my thing. Out for delivery. I'm going to see if there's a coffee song. Jamaica Blue.
You can make a case, guys, that things are getting a bit stretched. Evaluations, I think, are decent, around 20 times forward earnings.
First thing I knew, morning sun is peeking, a new day's inside. Golden rays are dancing, filling my world with light. First thing I knew is pour a cup of grace. Blue Mountain coffee fills up this empty space. Blue Mountain coffee, taste of paradise. Rich and flavorful, a soulful surprise. Sipping slowly, savoring the bliss. A moment of peace, pure happiness. From the highlands, where the clouds reside. Grown with care, a farmer's pride. Hand-picked berries roasted to perfection. A cup of magic, a true connection. With every sip, my senses awaken. A new day's journey fully taken. Blue Mountain coffee, taste of paradise. Rich and flavorful, a soulful surprise. Sipping slowly, savoring the bliss. A moment of peace, pure happiness. From the highlands, where the clouds reside. Grown with care, a farmer's pride. Hand-picked berries roasted to perfection. A cup of magic, a true connection. With every sip, my senses awaken. A new day's journey fully taken. Blue Mountain coffee, taste of paradise. Rich and flavorful, a soulful surprise. Sipping slowly, savoring the bliss. A
Cheers.
moment of peace, pure happiness. Legend has it, a taste divine.
Ja, Mann.
It's a sacred sign.
Ja, Mann.
A cup, a journey so sweet. A moment of indulgence, a perfect retreat. Blue
Mountain coffee.
Taste of paradise. Rich and flavorful, a soulful surprise. Sipping slowly, savoring the bliss. A moment of peace, pure happiness.
You ain't had it. Blue Mountain coffee. Oh, I've had it.
More than a drink, it's a soulful art. Warming my body and healing my heart. A connection to nature, a taste of the land. In every sip, I understand.
Stand Blue Mountain coffee.
Blue Mountain
Coffee.
taste of paradise. Rich and flavorful, a soulful surprise. Sipping slowly, savoring the bliss. A moment of peace, pure happiness.
Coffee. We're going back to the 100.
A cup of magic for eternity.
Tea. Blue Mountain coffee. I can't wait to take a sip.
Blue Mountain, sweet melody. A cup of magic for eternity.
Ja, man. That gave me goosebumps. Thank you very much.
Thank you very much.
He said thank you very much. That's too much. Blue Mountain coffee. Oh, yeah. Domino's Pizza.
Up about 9-10%. Cisco has got earnings in front of it this week. It's higher ahead of those. Kevin, what's your take when you look across legacy tech?
Well, I just look at the numbers and know where these stocks have been in the past, especially a company like Intel that was all.
So we've got the 100 right here, moving average. That's where I think we're going to come back and pull back to, and that'd be the right shoulder of this inverse head and shoulders. You might want to raise that up just a little bit. We'll see if that waits for that to take the trade. If that doesn't hold, it's a good drop to 74, 10 to 12. Right now we're at the support level, the first support at the 50 SMA on the 1 minute. See, we bounced off the 50 right here, bounced off the 50 right here, bounced off the 50 right in here with the wicks. So that's been a solid support. And if I was to take the call, which I should have, the 74.25s, that's what I'm going to do. Then I'm going to make me some apple cider. I've had lunch. That filled me up. $5.40 for the 74.25s. If you think the 50 is going to hold, but I'm going to wait for this and see if we can catch it on the right shoulder. 74.1856. See, right now we've got another head and shoulders right here. And that's off the 63. And then we got another one right here. 3 of them. And that's off the 9 or the 50. That's off the 50. But I'm going to see if we get down to the 3rd support. I'm going to have to raise that up here in a second. But I'd like to see it stay right there. Then we got a yin yang. Yin yang is a previous resistance and a support level. Oh, I forgot my ice cube. Oh well, gotta go back and get my ice cube.
We don't know, and you know, your hearts go out to those people that have been affected and that are still stuck on the boat.
Great insights, guys. We've got bull versus bear coming up. The guys will get their example trays put together for Tesla after pulling back earlier, now turning higher. We'll have more fast market after this break.
Tesla. I'm gonna raise up my alert
Your golf balls, your fancy coffee,
above the 100.
It's everything in one place. It's like Schwab. Everything investors need.
If I don't hold, it's gonna be a bigger drop.
They can do everything.
I'm gonna put my next alert right here.
Full service wealth management and anything in between. I think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Oh.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves and fundamentals shaping the markets in real time. This is Schwab Network. Subscribe at schwabnetwork.com.
Okay, there's the 50. Well, they're going to talk about Tesla.
Tesla in focus as its China story captures headlines. According to some reports, President Trump inviting executives, including Elon Musk, to his high-stakes trip to China. Meantime, on the sales front, according to the China Passenger Car Association, Tesla saw retail sales fall about 10% year over year to just under 26,000 vehicles, marking a second straight monthly decline. It comes despite earlier headlines suggesting a surge, with the drop largely tied to Tesla shifting more production out of its Shanghai factory. Meantime, the stock now adding to a strong run from last week when it saw shares climb nearly 10%. Some of that momentum driven
I see a lot more Teslas on the road.
Tesla's autonomous driving ambitions, particularly tied to developments in China. On Wall Street, the outlook remains mixed, with roughly 45% of analysts bullish, while about 40% are on the sidelines, highlighting just how divided investors are on Tesla's next move. All right, time now for the tug of war.
Divided. You're always divided.
Our co-hosts Kevin Hinks and Joe Mazzola. It is bull.
They're always divided.
On Tesla. Joe, I'll start with you. I'm curious.
Always.
Because it's like so many different headlines swirling around Tesla and Elon Musk. Your thoughts?
Look, Tesla is just Tesla to me it continues to be a trade, especially kind of amongst our clients. And what I mean by that is this: it gets down to around at 330, 350 level. They're heavy buyers. It gets back up around 450 or so, and they tend to be sellers. So I think the market overall has recognized that this is a stock that is, even though the range has been wide, it still is range bound. Now, that being said,
okay, we're at 460.
Potentially popping out of that range and
on the SPX.
450 level potentially. And I'm speaking of that specifically from the technical setup. I don't think that fundamentally you're seeing a lot of evidence behind that. But let's think about kind of what's happening here. You've got the likelihood of them releasing SpaceX to go public within the next couple months. I think a lot of people are getting trading Tesla ahead of that. I think you've seen a lot of upside call buying again, as I mentioned with some of the other technology names, and I think that's
74.25s.
Maybe dealers being caught a little bit offside, so they're pushing it up and when they're buying futures against it or buying stock against it. So there's a lot of things that are going on, and even when you look at today, just the way that the stock quickly moved and turned positive following the news of Musk joining that China trip. This is just it's very much a momentum stock right now, and the momentum seems to be behind it. So China sales of the cars. Yeah, I mean, I don't even know if that's priced into it anymore. Like, I don't know if people are pricing. Well, let me say this: I don't believe people are pricing Tesla as a car company anymore. You can see that from the valuation. And you can see it, from their reactions, even off of the news that might be a little bit soft. So you're looking at a stock that is moving, and could it come back and test some levels? We'll see. But interested to kind of hear Kevin's thoughts on the name itself.
All right, Kevin, the floor is yours. Your thoughts?
So I think what you're saying, and I think today's rally. Remember, this stock was fairly soft to start the day. It was down. It traded 422, I think, was the low.
What are you saying?
Range there. And by the way, that's when I was looking at my trade. I think this is obviously Elon Musk, and going to China is a big deal, right? I think that is a heavyweight contingent that they're bringing over to China, and so. That, I think, turned this stock up. Why? Because of the possibilities, right? I think the monetizing Cybercab and Optimus Robot are everything I read. It's moving along. It's getting closer. The numbers on autos have actually gotten better. They've bottomed and started improving. Here they are. Q1 revenue was up 16%. Year over year, margins were expanding. And so they're starting to turn around production and deliveries, even though they're taking out some of the different types of cars in order to put RoboCab in there. I think this is a company that has got so many things.
Nice bounce.
So I didn't even talk about chips. I didn't even talk about all the different things that they're doing. And we don't know what's even in the pipeline. What's next?
Sending triangle.
Do they have chips? Are they making them themselves? Are they going to be massive winners? I just think that Tesla's one of those companies, like Joe mentioned. I think a very small percentage still look at this company as a car company, and it's all this future.
$5 to $6 bucks.
People very excited, and frankly, when you bet on Tesla right now, I think you're betting on Elon Musk, and so far that's turned out to be a pretty good bet.
All right, let's get into the example trades. Joe, we'll start out with yours. What's your approach today?
I wanted to stay within the rules, so we look for a little bit of a bearish trade. I would say it's I'm looking at this a put calendar. So and as Kevin mentioned, we priced these up about an hour and a half ago, and things have moved quite a bit. But my trade was this: it is the May 22nd versus the June 5th 410 put calendar. At the time, it was about 515. I think it's probably around 460 now. So it's basically lost 10% of its value. So if it's something you're interested in, it's cheaper now than it was before. But this isn't really. Let me kind of phrase this or frame it by saying this. It is not necessarily a bearish trade. It's a trade that it potentially is looking back for a pullback for the next run up, if that makes any sense. So you've got this huge move that we've seen that's taken it back above its 200-day moving average. It's pushed the RSI back up to very lofty levels. Now around 70, 73. So it just got back up above that kind of line of demarcation, if you will. It's got strong momentum behind it. All that being said, is it possible that it comes back and maybe tests a level before making that next leg up and pushing back towards the 460, even the 490, almost 500 level that we saw, which would represent a 52-week high? I'm not sure that it does, but if this is something where maybe a trader believes that this rally is getting a little bit exhausting in terms of the shares and the move that it's had, and it's going to maybe come back and test a little bit.
Come on.
Doing a put calendar, especially with IV percentiles that are around single digits, is a way for you to have some flexibility there, because if it does pull back a little bit, gets back towards that 410 level, you can do a couple things, right? You can close out that May 22, you can roll it.
So here we got what's called an ascending triangle.
Though not perfect, no trade is. They've got a lot of utility to them. And frankly, Joe, I look at your trade, and yes, the stock has moved away from it, and it's a neutral to bearish trade when the stock is moving higher. But that said, the stock can move lower extremely quickly with any news, and so.
Oh, come on!
And this trade, if I'm right, May 22nd, gives you a chance to extend duration and chip away at that debit. So
that's called a put calendar.
And a stock
that's just a regular old put.
This is a trade that you're really never out of until it's all the way done, Joe. Now, similar to your trade,
Where is it?
because the stock has moved enough, where my trade is now slightly bearish, Joe, because of the strike that I've chosen. I also chose a calendar spread, but I chose the 430 calendar spread when the stock was about 422, 423, and I wanted mine to be slightly bullish but more range bound. Well, turns out it's slightly bearish now, but range bound, just because of where the stock is now. So that's the incredible thing.
Okay, I'm confused.
Why you should educate yourself with calendar spreads. Because my bullish trade that was targeting the 430 strike when it was 422 is now targeting the 430 strike when it's 439, and now it's more on the bearish
calendar spread.
Side. But you're collecting theta, you're long implied volatility on this trade, and you're risk defined to the debit paid. Now, I did, like I said, the 430 call calendar, May 29th, selling the May 15th. So a 2-week wide call calendar that will allow you to extend duration. If the market allows you, you can extend duration on that trade into the May 22nd. Joe, we put this in at 7.
So that's calendar spread.
Higher, even though the stock has now gone through my.
So if I go, what's the date? Oh God, caca. May 29th and May 15. Calendar spread. To July 17. Wow, it's just jumped up. That's not on this one. To June 26th. $435. So let me redo this. May 15. $735. There, that's 12. That was 11 something a bit ago. That's to June 12th. I like that one better. Question is, should I buy it when I don't know nothing about it? I got to raise my alert up above the 100 here. And raise this above the 200. We got a new high on that last alert. $74.20s went up $300, almost $400. And 74.25s. They went up 50. We're up 50 right now. They were up 620. The calendar spread. Got to learn the calendar spread. I'm going to watch a few videos on it. CALEN calendar. Calendar spread. Oh, my baby's on.
You know, the weather's getting nice. Consumers are getting out there. They're
The humans.
new shoes, and they're increasingly turning to OnCloud. And so I think for us, this is a unique opportunity where we've got demand heading in one direction while a bit of fear has been baked into the stock.
On.
You know, Megan, it appears to me, I read an article and it was a great title. It said, Nike's loss is On's gain. And this stock has sold off. You know, there's been some reasons. Some of them I don't think are right. When you lose your CEO of 2 decades and the stock, you know, struggles because of that, but you're replacing him with the 2 founders of the company. That's not necessarily the worst turn of events in the world. And a lot of Nike's weakness in their earnings release was due to China. Well, On Holdings, their Asia Pacific business is growing 85% year over year. So I think, you know, they love to sell off stocks with their sectors, right? And they sold off Nike. On Holdings went down with Nike. But On Holdings just very well maybe taking business from Nike and growing, much like AMD grew and hurt Intel. I think On Holding is growing and hurting Nike.
I want to see if their shoes look
Nike's
better.
having troubles recovering. This is a shoe company, and full disclosure, I have my first pair for about 2 months, and I love them. And so this is a company that seems to be doing really well, and you know, that little company that just kept growing and innovating, and now they're not so little anymore, Megan.
Yeah, I think that you make really good points. You know, we kind of feel the same way in terms of, you know, there was a leadership change, but as you mentioned, it's the founders who are taking the helm, and they're very, they have a very, you know, growth-oriented mindset and are really driving that, or that seems to be the vibe that we're reading. And also, whenever you look at consumers and what consumers are talking about in sentiment levels when you compare these different brands, you know, you're not an edge case. Consumers, whenever they try these shoes, they're very, very comfortable. They love to rave about them. That's why I think that sentiment is so loud, and we have quite a high sample size for this brand, even though it still is semi-considered up and coming, at least when you compare to a giant like a Nike. And I think part of that is because they are doing a really good job of targeting runners, and that's an area where Nike has shown considerable weakness, and On is certainly taking advantage of that. And even if you were to look at this and compare it to another, you know, high-end quote-unquote running shoe, if you look at On versus Hoka in our data, there's a very big split here. We see, you know, pretty significant overperformance from OnCloud there as well. And just to give some scale, you know, On still has a lot of market share left to steal from Nike. When we look at just overall, you know, web visits for every, if you were to chart every single one of those companies that were listed on that, bar chart compare, and you were to compare on's piece of the pie versus Nike's piece of the pie, you're looking at a 6% versus a nearly 40%. So still a lot of pie left to take for OnCloud, so definitely still some room for growth. And you can see here on this chart at the end, that dotted line, that's the stock price, and the green line, those are web visits, and those are headed up, and those are clearly accelerating. You can see that tail end is accelerating just in the last month as consumers,
I'm not sure if that's my kind of shoe or not.
Exploring
Okay, we're dropping down.
We think that this is a pretty uniquely low bar heading into earnings. If On can prove that the founders are
You ready?
New leadership is driving the company in the right
We just
direction.
now breached the triple
At least
bottom.
In our data, we see persistent and clear signs of consumer momentum.
Megan, so it's interesting that I noticed the divergence in your data versus how shares are performing. Kevin made a great point about the hatchet essentially being taken to the sector, whether we're talking about On, Nike, Lululemon, which has its own issues, because that picture looks great also for Lululemon, but I imagine that also has to do with easier comps on a year-over-year basis. Now for On, Deckers is still under the parent company of Hoka, is still under pressure as well on a year-to-date basis, but it is performing better than On. What do you think that's about?
Deckers has a lot of other brands under
Hoka's a better shoe, that's why.
Particular kind of premium brand, and I think there is a lot of fear baked in to that leadership change, as you mentioned, and potentially just a little bit lower guidance last quarter than maybe some investors would have liked to have heard. And I think just in general, there's a question of how long can consumers keep paying this premium price tag for this shoe, and that's fair enough.
I pay it.
Whenever we were listening around holiday sales,
They're not that
noted
expensive.
They weren't going to discount, and this is something that they wanted to preserve the brand and keep that brand at a high premium value for consumers. And at least in our data, that's what we're listening for. Our consumers still willing to splurge, to pay for that high perceived value, and so far
What the
it looks like
fuck's
they
going
are.
on
So
here?
I think that's kind of a bit of the discrepancy there. Another area we're on, I think, is improving. It's expanding into its apparel sales.
Oh,
Also
here we go.
building out its own
Triggered.
physical locations. I think it has now 70 owned locations where
Get ready.
consumers can shop as well as in other retail locations.
Attention deficit disorder.
Still very
Now.
which is where our data is really
350, 330.
momentum.
All right, thank you, Megan. That's Megan Brandt, the research at Folio. All right, let's get into the trading perspective for all things On holdings. Kevin, we got some great insights from the
I waited.
Big divergence, as we both noticed, between what the consumer interest looks like. I hear
Come on now.
about their shoes. I've tried on a pair before. It wasn't for me. I tend to like a little bit more cushion. They may have more cushion now because it's been some time. But across the sector, there's been troubles, as you mentioned. So your final thoughts before you jump into your example trade.
Yeah, I think this is a company, and I think Folio's data, is in line with what I was reading that said they're actually taking business from Nike. That's why Nike is struggling, but they sold off On holdings because of that with the rest. These earnings coming out tomorrow morning could really change the narrative that this company has kind of been taken away from the fundamentals, which are getting better. And like I said, normally a CEO leaving might be something negative, but when the co-founders of
Come on, man.
take over, that could be perceived as, not anything to worry about. So I looked at Folio's data. I looked at what I read. The bar is pretty low here. So I looked at something on the more aggressive side, which is in the calendar family, but a call diagonal, something to give me a little more delta. So what I looked at, I bought the 34 call, went out 2 weeks, went out May 29th, bought the 34 call. Then I went into this week and sold the 38 call, the expected move, right around $3.50. I'm playing for about a $4 move, Diane, a little bit more. If the news is
Jim,
good, I'm
you're up
playing
$10
for
a contract.
Of a move. Could you do a 30?
Jim, you're up $10 a contract.
But I'm thinking.
Have you ever thought about selling? No. I should. We get so many mixed messages in the news. Victory, that is Washboard Jim's battle cry. Iran. Bob, 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 Moran. Bomb, 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 Moran. Bomb, 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 Moran. Bomb, Moran. Come hold my hand. Bum, 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 Moran. Jim, you're up $20 a contract. Have you ever thought about, Jim, you're up $30 a contract. Have you ever thought about, Jim, you're up $40 $80 a contract, $50 a contract. I should sell. I've been working on the railroad all the livelong day. I'm gonna get out of this trade. Just watch it go my way. I'm up $70 a contract. Let me out at 4. Jimmy done another score. Ha ha ha. Oh my God, he did it again. He did it again. 420, Randy, 420. Hickory dickory dock, the mouse ran up the clock. The clock struck 12. Oh yeah. That's how you do it. That's how you do it. Oh yeah. Hickory dickory dock, the mouse ran up the clock. Yeah. Yeah. That's how you do it. Tweezer bottom. He had his alert set. Both of them were triggered within seconds. It seemed like this candle went so fast, and that one's like, felt like 5 seconds, and it's actually 2 minutes. Woo! Well, I patiently waited for that 200 SMA. I gave it some time, I knew it'd come my way. My first alert was set at the 100 EMA. I sat here for a while, sat here for a while. And she dropped like a rock, cracked all the walls, cracked all the walls. I bought me some contracts on this important knife. I looked at my wife. I said, baby, a shot of vodka and a Valium. But old Nancy was in the restroom taking a dump. About the same time that ESPX also took a dump. But it gave me enough time to buy this knife. I did it for my wife, Nancy Pelosi. If you ever see her in a bikini, her huge titties flop around. I love you, Nancy. You are my gown. Well, Iran rejects the lies that America spreads. The peace stalls. It's all about oil. It's the liberals' worst dream. When the oil is hot, them tree huggers forget that carbon dioxide makes everything green. I'm retesting that 200. Is it another Iran lie? Or is SPX gonna die? I'm the singing day trader. I'll catch you all later. Give peace a chance. Whoa. Just give peace a chance. That landed a little hard. Can't crack my guitar. Here we go again. If you watched my video on that I did for the IWM, Jimmy said there would be some volatility. Now, are we going to hold this support? I mean, this is the time to get in. We're now at $2.80. I'm going to do it. And there's not a thing you can do about it. Jim, that's a little risky. It is a little risky. As long as I hold this double bottom here, I'm going to, better slow down. Better stop. $280 and $260. Snake breakout, double bottom, higher low. Showing a little bit of risk here. Showing a little bit of risk. No, don't dip. You got to hold right here. Hike. Come on now. The Tesla is up, that calendar call or put is up 40 cents. I'm not in it. I'm just trying to paper trade it. But I'm going to have to get out of this thing if it's on hold here. Because all of a sudden the bears are in town. We have a lower low now. See, this is bearish. Oh God, no more, no more, no more. I have 4 contracts. Let's go. Come on. Come on. Can't wait for my coffee to come in. Ordered it on the 30th. It's not going to come in until the 11th. I'm kind of disappointed about that, but what the heck. We got an inverted hammer. You know, we need a tweet. It says there's going to be peace between America and Iran. Jim, you're up $80. Have you ever thought about selling? Not yet. I want to take and break the 9. Come on. I was up $40 a contract there for a second. Now that would have been worth selling for 160. Let's go.
Every morning at the mine, you could see him arrive. He stood 6'6" and weighed 245, kind of broad at the shoulder and narrow at the hip. And everybody knew you didn't give no lip to Big John. Big John.
Big Bad John.
Nobody seemed to know where John called home. He just drifted into town and stayed all alone. He didn't say much, he kind of quiet and shy. And if you spoke at all, you just said hi.
Big John. Jim, should I sell it? I'm at $280.
New Orleans, where he got in a fight over a Cajun queen, and a crashing blow from a huge right hand sent a Louisiana fella to the promised land.
Big John. Big John. Big John. Big Bad John.
Then came the day at the bottom of the mine when a timber cracked and men started crying. Miners were
Gonna take
praying and
280
hearts beat
contract.
fast, and everybody thought that they'd breathe their last.
Big John.
Through the dust and the smoke of this man-made hell walked a giant of a man that the miners knew well, grabbed a sagging timber and gave out with a groan, and like a giant oak tree just stood there alone.
Big John.
Big
John. Big John.
Big Bad John.
Yeah.
Big John. And with all of his strength, he gave a mighty shove. Then a miner yelled out, "There's a light up above!" And 20 men scrambled from a would-be grave. Now there's only one left down there to save Big John. With Jackson Timbers, they started back down. Then came that rumble way down in the ground, and the smoke and gas belched out of that mine. Everybody knew it was the end of the line for Big John. Big John. Big John.
Big Bad John.
Big John. Now they never reopened that worthless pit. They just placed a marble stand in front of it. These few words are written on that stand. At the bottom of this mine lies a big man. Big John. Big
John. John. Big Bad John.
Big John.
I wasn't able to get out of all my contracts, but I did take a few on contact. So let's see. Is there a miracle left for me? I will find out in a few minutes. You'll see. I knew this chick, her name was Vegas. I had the biggest old crush on her, but it never worked out. Big Bad John. Then I met this Asian chick. She just wanted me for my money. I once called her my honey. Then I had to let her go. Big Bad John. So I dated Laura for about 10 years. All she did was bring me tears. I had to let her go. It was hard to do. Big Bad John. She was a high school cheerleader back in the day, and everybody wanted to jump in the hay. But she paid attention only to me, and I had to let her go so I could be free. I need a big bounce to sell these last 2 contracts. I could get out right now. With $40 profit. We got a small fallen wedge. We could come down to number 3, but if we break out of here, I'll sell them. You'll see. So when I was 20, my mom's best friend took me back in the bedroom and said, "Jim, it's time." And I said, "No. You're too old for me, baby. Let's go." You ever have your mother's best friend try to pick up on you? It's not a good thing. Well, I had 290 there and I didn't get it. Okay, that's where you're going to be. It's like I said, this could come down to number 3. That's a fallen wedge, wide mouth. Now we got this news. You know, it's chit-chat back and forth like this with Iran and America. It's going to get old after a bit. Especially when the markets are up so nice. Come on. Come on, squeeze, baby. We're still bearish. As long as we're under the 200, we're bearish now. Come on, squeeze. It doesn't have too much confidence right now. The tape's just barely moving. I don't know about on. I never was an on trader. I don't like the way the shoe looks, but uh-oh. About ready to wipe my profit off. Said we'd come back down to number 3 maybe. Nope. Can't go no more. I'm going to stop out. If I just waited another second, I'd got 185. We could easily go to the VWAP now, so I'm going to get out of these. Got a fallen wedge on SPY. She just wanted to teach me a few things, and she did. puts on the spine, found a triple bottom the day the volume died. We were singing bye, bye, bye. The day the volume died. But Jimmy was not scared. Watch me get out of this trade you care. The day the volume died. Oh. He goes to 10. Oh. Oh. You think so, huh? We get down to 738.46. But first we have a head and shoulders support level right here. I think that's about the only excuse they got anymore is Iran. Echo D's mixed. Crude oil rises with treasury yields as Iran ceasefire on massive life support. Bomb, bomb, bomb Iran. I need to go make me some more drink or some water. I'm about ready to get out of this trade. The Tesla puts, or the put calendar is at $13. So with the put calendar, I'd had $1,220 in the trade. Now it's at 13. So I'd be up $80. There we go. Jimmy's in the green. Jimmy's in the green. Randy. Come on, you can do it. I have faith in you. Yes. Come on, come on, come on. The question is, should I sell them? We're at $2.15. I think I will, because I don't trust. $2.25. My name's Washboardjim. I'm the founder of the Sneaky Snake trading strategy, where I got out at $2.25. On 6 contract. Oh, whoa, I had more than that. Shit. Had 12. Woo! Now it's at 245. Scale out. If anybody took calls with Bobo. Oh man, come on. Hello, my name is Washboardjim with a Sneaky Snake trading strategy where I talk about wild women and hot girls. May I help you? Would you like to make an appointment? Yeah, we're at $3 now. Okay. I'd like for my coffee to hurry up and show up. So let's explain what just happened here. So I sat and I waited patiently for my alerts to hit, and once they hit, I jumped right in the trade. It run up a little bit. I had 4 contracts. I sold 2, kept 2. Then as it dropped back down, I piled in 2 more. So I had an average of $2.45 to $2. Then I added 8 more at $1.70. That gave me 12 contracts with an average of $1.87 out at $2.25. Now these things went to $3. They went to $3.10. So I left $85 times 12 on the table. But I still came out a winner. Chicken dinner. I wasn't scared. Not scared of a Y ran. There was a man, his name was James Howard. He was the founder of the Sneaky Snake trading strategy. He always talked about chart patterns, moving averages. But never forget, he was always in the now. The stock dipped on down, and he grabbed a knife. It formed a falling wedge, without no surprise. That falling wedge is a bullish pattern. A lot of people don't see it. But when Jim's around, the stock will go down. If you can count to 3, you can trade with me, as I just displayed on the screen on YouTube TV. You look at the top, 1, 2, 3. Look at the bottom, 1, 2, 3. This song is about peace. Let's let it be. So the 9 EMA crossed the 21. Right about the time that it hit that number 3 resistance. If you can count to 3, you can trade with me. If you count to 4, you just might make a little bit more. I'm the only country singer that trades stocks. My ex-girlfriend had no clue. She'd be driving a Mercedes-Benz if she stuck with me. That's too bad. Now I'm glad for once in my life. I never did like rejection, but I like Marley's titties. When she walks, they go boom, boom, boom. There she is, the woman in red. I just knew she was there. I love you, Marley. You can't get over Intel, can you, honey? You were a bear just yesterday. What happened there? You were crying, listening to all your analysts. They stirred you wrong, but you didn't listen to Jimmy, because I wasn't on the list. Costa Rica, they're making chips for Intel in Costa Rica. Well, don't they make that look so cool now? Darn, you're hot. God, look at them things run. Oh no. 390. Oh. Jim, you have no idea. No. 390. 3.90 minus 225 equals $165 times 12. $165 times 12. I left $1,980 on the table. I left $1,980 on the table. And that's a bunch of shit. It's a bunch of shit.
Are really seeing a resurgence.
I know, and I feel like for Intel, maybe this was a long time coming because they have been undergoing this like a massive strategy shift. But a huge part of their, I mean, a source of strength and also can be their source of weakness is everything tied to Foundry. As we know, Foundry still does not generate substantial or really losing money still, frankly, but that's also a part that's mentioned. I see by analysts over and over again, but there's still a lot of proving themselves they have to do there.
Well, I mean, getting this Apple contract or getting any kind of confirmation on this Apple contract, I think would be a huge win for that Foundry business. It's also been a huge focus for Louboutin, just in general, this turnaround and how important that is and key to the turnaround plan itself. But once we get confirmation on this, and the reports that are coming out now say that it's final talks, it's final stages. So we may actually get some commentary on this soon-ish. I can't quantify when, but the reporting is seeing an uptick here. So whoever these sources are clearly talking more about more concrete things happening behind the scenes.
Yeah, that's a good point there. And Intel, I mean, has been just one that I think that we're all, frankly, every day that we're higher, we're like another new all-time high for Intel shares. We have actually pulled back about 5% from the all-time high made today, but a really impressive story.
I think there's an important thing here, though, to discuss, which is you could have been the biggest Intel bull, and you could have said, hey, we've watched NVIDIA do what it's done. We've watched Broadcom. We've watched SanDisk. We've watched Micron. We've watched AMD. And I don't know that you could have ever been like, hey, 2 months ago, still, positive Intel, White House is involved, all this stuff, that this stock's going to be $126 a share. Oh, and by the way, that's $6 off its highs.
Or that we were going to be up now, 242% on the year. I mean, that is just a move that is, frankly, unprecedented in any name, let alone a company as established and legacy as Intel has become. So when you trade this name, then I do think that right now, I mean, as momentum does swing, we've definitely swung in a more bullish favoring direction, which has been a welcome change of pace for those that have, again, been longtime investors of this stock.
Yeah, and for those who aren't involved at all, it can be difficult, right? Because you have that feeling of FOMO, but you also look at this and say, hey, it is Intel after all. The only thing is you might have said that at $60 a share, you might have said that at $40 a share, you might have said that at $80 a share, and clearly it had more room to go. And so this is a neutral bullish strategy. It is risk defined, but it can benefit even if Intel just holds on to its value or even get.
So YouTube traders, this is called a fallen wedge. My strategy of 1, 2, 3, 1, 2, 3, coming back up, that's a sweet spot. I wasn't scared. I was a little nervous, but I recognized the fallen wedge. They're not 100%, but they do act pretty good under my account. A fallen wedge. What is a fallen wedge? It's all about chart patterns, moving averages, and being in the now. I go to this thing called chart school when I first started trading. And I'll put it in the room. The falling wedge is a bullish pattern that begins wide at the top and contracts as prices move lower. This price action is a cone of slopes down as reaction highs and reaction lows converge. The contrast to symmetrical triangles, which we have no definite. Man, I don't like the way this thing. You have to be a college-educated rat to understand this. The falling wedge is a bullish pattern that begins wide at the top of contracts and contracts. The falling wedge is a bullish pattern that begins wide at the top and contracts as prices move lower. This price action forms a cone that slopes down as a reaction highs and reaction lows. You know, I don't like the way they explain it. I like this way. Price pattern marked by converging trend lines on a price chart. My version a falling wedge pattern is when your higher lows meet your lower lows with a wide mouth that forms a breakout. It's called a falling wedge. Then you have a rising wedge, which lately has been breaking out. When you have higher highs and higher lows. Man, that was a nice trade. That one I should have had, oh my gosh, $5. 187 to $5. Now that's 520 minus 1.87. That's $333 times 12 equals $4 grand. $4 grand. Oh. $4 grand. $640. Fuck. Oh. I gotta retire. I can't take this no more. It's bad on my heart. That's $450 times 12. That's $5,400. $680. Oh my God. Ugh. Oh, they went to 680. The put calendar is now at 1310. Oh boy. Dadgum, man.
Tracking the memory space, guys. Yeah, very well said. We're back on today with another.
Washboardjim trade stocks at dawn. He's got his eye on the charts till the night is gone. Patterns dance like a wild old song. Breakouts rip and dips of gold. He's got the secrets the wise ones hold. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right. How does he do it?
How's he do it?
How does he do it? Moving averages, they paint the tail. Up and down like a shipping gale. Catching the wind, he sets the sail. Green candles climb, the bears retreat. Jim's got rhythm, the markets beat. 3 black holes in the morning light. Bull flags waving like they're gonna take flight. Washboardjim, yeah, he knew it. All right.
How's he do it?
How does he do it?
How's he do it? Lisboa, London. Lisboa.
And you may look dumb in public, and you know, that's really the bottom line.
Tom, that makes a ton of sense. Now, the only thing, and just for conversational here to kind of push back on that, if we look at how the progression of what, let's say, a ChatGPT was in 2023 versus what some of the prompts you'll get from a Claude or a GPT or a Grok now, it's not that implausible to say in 2 or 3 years it's gotten a lot better and it's nearly indistinguishable. And so when we start thinking about this, is it important to think about what it is now or to try to think about what it might be?
But that's a good point. But you know, there's actually studies that say that the output is getting worse, not better, with AI data feeding on itself and training on itself. That you're actually seeing more mistakes, and it's actually putting out information and data that it's actually hallucinating more, I guess, is the bottom line there.
Okay, so what would you say are some of the fastest tells to that an audience is reading AI written content?
Sure, there's a lot going on there. There's the big one that everybody's talking is the overuse of the M dash. You know, for some reason AI can't get enough of the M dash and it puts them everywhere. Another huge tell is contrasts that explicitly deny one option to highlight another. Like, this isn't just a tool, it's a paradigm shift, or it's not merely a function, it's a fundamental rethinking, or this isn't about speed, it's about transformation. I mean, we've all seen that when we read AI content, and frankly, it's annoying to say the least. The word landscape, if you come across any article that begins in today's digital landscape, in today's so-and-so landscape, you know, that's a huge tell. AI also tends to give you paragraphs and sentences that repeat each other just in slightly different words. It's almost as if AI doesn't trust that you got the point the first time. So if it kind of feels a little weird, a little repetitive, good chance it's AI. And then, of course, what I mentioned before is the hallucinating. AI makes up facts, and there's actually data that suggests that this isn't getting better, it's getting worse.
So in your mind then, where does the technology merge here and fit in? Because it's clear there's a lot of belief in it and the investments are extraordinary. And because of those investments, it's going to be implemented. And so where do we draw that line, at least now, to kind of help, you know, I guess, get us to where it can be a little bit more reliable?
Yeah. In terms of reliability, I mean, that's on the developers, that's on the Anthropics and the ChatGPTs of the world. But I will say that you know, if you're a thought leader and you're approaching AI, just think about the 80-20 rule. In my mind, there's an 80-20 rule when it comes to the content. I'll start by saying that AI isn't bad. It's fine for the first 80% of the task. The research, the structure, the rough draft, that's all good. Use AI. Go ahead, use it as much as you can. But it can't do the thought, it can't do the leadership, it can't do the originality. That's the final 20% where the magic happens. So that last mile is where you add your voice, you add your viewpoint, you add your personal experience, and it's what makes the content feel real rather than man-made, or rather than machine-made. So AI is a great starting point, but it's only a human that can get you to the finish line. And in a way, you know, the content industry could be a bit of a canary in the coal mine here. You're seeing the content industry bifurcate between, you know, what people want and what they don't want. Yeah, and that blowback can start to happen in other industries as well.
I completely agree, and I do feel like now it makes me even conscious as a writer myself to be like, you don't want to sound like you are obviously using AI, but obviously it's still a great tool for efficiency, so it does definitely raise the concern of how do you find that perfect balance, which I think we're all learning here in real time. But I so appreciate it. Really great conversation and such an important conversation to have right now. Tom Stein, co-founder of Fluent Partners. Now, coming up next on Next Gen Investing, we will dive into the move today to the upside and Target Hospitality hitting a 3-year high on news of a new deal that could generate roughly $750 million in additional revenue.
opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading.
That was a good trade. Man, I tell you what.
Schwab Network delivers real-time market insights, live from the NYSE, NASDAQ, the SIBO, and beyond. From earnings to economic data, we cover what matters as it happens. Streaming 24/7, anytime, anywhere, free on schwabnetwork.com.
Morning movers, be the first to find out what's shaping early market action. Tech check, options corner, futures focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day, 7 days a week on schwabnetwork.com
and on all your favorite streaming services. Schwab Network.
Available anytime, anywhere, on any device for free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
I'm Nicole Petalides, live at the New York Stock Exchange, and this is the Watch List. Your midday view into the trends driving the markets with a sharp focus on technology, innovation, and companies leading the next wave of growth. Big movers, real-time interviews, and insight from analysts, founders, and market voices you trust. The Watch List, 2 p.m. Eastern, only on Schwab Network.
Welcome back to Next Gen Investing. We are seeing a major surge today in Target Hospitality shares after the company raised its full-year outlook and did announce a major new multi-year contract. So for more on some of the upside today, we are now joined by George Tillis, Senior Markets Correspondent for the network. So George, I will say that this was still a pretty mixed report, but clearly we are paying attention to the good here, up 17.5% on the session.
Yeah, that's a good one. I mean, we talk about data centers and technology and all of the aspects of AI, but we really got to think about the verticals involved in the production of these data centers and the installation and construction of them. And Target Hospitality is very interesting in this context because it's really a workforce housing company. They supply the market with modular accommodations, rental and hospitality services. So basically, they develop and help maintain temporary housing communities that are utilized primarily in the past for like oil and gas rigs that are being dug, or in this case now data centers. You got to think about all the workers that need housing when they're essentially constructing these data centers, and Target Hospitality is right in the mix, and that's why the stock has been higher. I think the last year about 160%, doing very well. If you look at the report, you're right, it was kind of mixed. I'm going to look at it on an adjusted basis, but they did print a loss of 10 cents. The estimate was a loss of 11 cents, so they beat the estimate, but that was actually worse than last year, where they published around a loss of 4 cents per share. And then, of course, that number did beat on EPS, but nonetheless, they missed.
Okay,
sales
coming to the
by just a
63.
fraction, about 1.2 million, coming in around 73 million. But it was still higher by about 4%.
Judge.
The thing is these numbers.
Target Hospitality, called TH. We got a yin yang right here. $74.20. I'm going to have to clean this up pretty soon. It's starting to get a little ugly. That was knife catch was kind of risky trade when I jumped in it. I jumped in it a little bit too fast, I think. Still came out a nice winner, but man, if I'd have held that, gosh. It's like leaving $4,000 on the table. But I'm not scared. I'm just sick. Sick. That calendar spreads at 13:15 now. A message Squawk Box again. Are still pumping bearishness. Squawk Box acts like there's nothing happened, and they for months have been pumping the pullback. I didn't even listen to him this morning.
Eastern here at the New York Stock Exchange. We've got a packed show coming up for you. We've got markets continuing to move higher. We'll spotlight the space economy ahead of AST Space and Mobile's quarterly results. Our panel today will dive into a look back at Constellation Energies and the nuclear space and check on the momentum there and why Constellation Energy is not catching a bid today, at least earlier in the session. Let's get right into a check on the markets with just about 2 hours left in the trading day here. We've got green on the screen. We remain on record to watch even after choppy trading throughout today's session. Investors shaking off any worries about negotiations between the U.S. and Iran and any steps back in progress there. The S&P 500 right now better by 1/3%. So too is the NASDAQ 100. The Dow has a gain of about 1/4%.
I don't even think I took off my shoes today. That's interesting.
By 0.75%. Let's get into a look at the heat map and check out some of the price action that's happening over there when we look across sectors. We've got gains in several of the sectors in the S&P 500, but we got some taking a step back as well. Energy is on the plus side, materials as well, utilities, industrials, information technology. You're seeing some green in Micron, Nvidia, AMD continuing to catch a bid. Tesla, we have been watching that one throughout today's session because earlier that was lower, but it managed to flip positive on news that Elon Musk was invited along with a team of other executives to head to China for that high-stakes meeting between President Trump and Xi. In terms of pressure, we are seeing weakness in communication services and consumer staples. There's been questions about the consumer taking a step back. Consumer discretionary, a little bit of pressure there. Let's take a look across some of the other price action. Crude oil higher. You typically hear the theme when oil stocks drop. That is not the case right now as we continue to see oil at elevated prices, although we are off of a triple-digit move in West Texas Intermediate. We are looking at WTI higher by about 3% right now, just above $98 a barrel. Gold taking a little bit of a step back today, off by just shy of 0.75%. Yield on the 10-year up by 4 basis points. Dollar pretty flat right now. Bitcoin adding to the gains that we've seen recently has been gradually pushing higher, and crypto watchers have been looking for sustainability beyond 80,000. We are seeing that right now. We are looking at it higher by more than 1%. Bitcoin above 81,000 right now. And we are about 2 hours away from the closing bell on Wall Street. And let's get a closer look at some of today's market moves. Joining me now is Sam Vadas, host of so many shows on the network. More Straight Live, Market on Close. David, she's got it, exactly. Okay, so I know you're taking a look at some of the big moves in the market, but what a turnaround that we've seen in this market. Really quickly, your thought on that, Sam?
I'm impressed by how unfazed the market is right now, with a 10-year yielding at 441. Higher oil, President Trump saying that the ceasefire is on life support. President Trump also saying that basically Iran's response, which we finally got via Pakistan, was basically not good enough. And you also have the higher dollar and basically a Mag 7 that's split right now, Diane. And so this really feeds into the fact that we continue to see equity showing that they can.
They don't understand it. They don't. All their things you just said would bring the market down. And I just don't know what to say about these people anymore. I mean, these people, these are better than CNBC.
Markets right now about a quick fix to this conflict, and I think.
I mean, by default, you became underweight because of that 20% move in a month. And we'll point out, tech underperformed for months, starting, November 1st.
It did not.
Going into the war. And the day the bombs dropped was the day that tech started to outperform.
No, honey. Tech was way overbought. It didn't underperform. It was way overbought. It didn't take me but 5 seconds to get on this channel and say, you're full of crap. Now they're coming up with, they're going to be making excuses. What the hell?
Hello, can you hear me?
Yeah, I can hear you. Who's this?
Yeah, hi, this is Jim.
Yeah.
I'm calling you from Subsidy and Benefit Department. So, how are you doing today?
Calling from who?
I am calling you from Subsidy and Benefit Department.
Yeah. The benefits department? What the fudge? My phone's bugged. Oh boy. Verizon, I tell you what, they just don't have it anymore. I pay too much a month for this phone.
Mistakes they're taking. And that actually makes it a much more integrated system, which I think is actually an efficient way to go, but still leaves investors the choice of where do they want to be exposed. Chips, software, data centers, etc.
What implodes the trade? Even if it's just for a correction, is it a piece of information in earnings? Is it a news item about additional capacity coming online for a memory factory and they sell? What are you on the lookout for?
Slower growth. Yeah, I mean, these multiples aren't high. I mean, look at NVIDIA, right? Its earnings growth is roughly 3 times its PE when you look out 1 year. Same thing for AMD. Same thing for Broadcom.
No, AMD's.
But those multiples are based on the next couple of years of earnings. And if investors get a look at 3, 4 years, 5 years out and say, oh no, earnings growth is going to slow. Micron, all it would take is for everybody to recognize prices are going to fall. And then they have negative earnings, right? And that becomes a real problem.
Oh gosh. I can't take it anymore. What would it be like to trade with people like that? Well, it'd be hard on me. snobs for one. We almost came back and hit my support. I got to raise it up now. The 63. So that would be a double bottom. Really, it should be the 100s what I should be looking at. So I'm going to bring it back down to the 100. I like the double bottom. So I'll put it, I'll just leave it there. If it doesn't hold that, then I'll jump down there. Chewy's pulling back for a triple bottom. AMD new high.
we launched UFO, our space ETF, 7+ years ago, and the idea there was that space is a tricky industry. It's difficult to determine who the winners are going to be. So many people might look to play this industry utilizing diversification. So, UFO is a fund that has roughly 50 publicly traded companies from around the world.
UFO? That's one heck of a name for a company.
And so, right now you do have AST Space Mobile. We'll see what happens when SpaceX does go public, but there are numerous ways now to play various different sub-industries.
You go get some water.
In the space sector. So, I think diversification is one way that people are looking at going at it. And
Okay, we're about to hit support.
All these stocks, or to even get exposure to individual stocks, especially if they're foreign names.
Yes, especially if they're still private, such as the case of SpaceX.
74.25s at 420, Randy.
Visit at the New York Stock Exchange of the astronauts who, returned to Earth. And
The Randy, 74.25s, SPXs at 420. Randy. I'm going to clear this chart up so I can read it. We got a megaphone. Here we go, right here. Prepare ye in the name of the Lord. Will you please accept $4? No. Damn it. There it is. Come on. Should grab 410. That's a megaphone. 1, 2, 3. 1, 2, 3. We got a wick. And a wick. Here we go. Now this 100 should be it. I missed it. 350. Ah. So bounce resistance, some resistance with that 100. You know, Rick was talking about this earlier, not about the 100, but about the 21. We bounced off the 21 before, he said. We bounced off the 21 before, so we might bounce off of it again. And I've been explaining that same strategy when using the moving averages. Look for which one it touches the most. And in this case, it's the 100. So that thing was at 350 and I just didn't grab it. Couldn't grab it. It was too late. I was jigsawing around. I should have been paying more attention. I love my moving averages. I think I got the best ones out there. It took years to come up with them, but maybe it might have took someone else a lot shorter of a time, but because, you know, I usually stick with something that works. Like that. Golly. I could have got them at $4 at least. Easily, $3.90. That's a $100 bill. Just from the 63. 520 now. Oh well. That last trade kind of threw me off. Leaving that kind of money on the table is hard to do. It's not hard. I mean, it's just hard on you. $5,000. $5,400 trade. Just from here to here. It's hard to look at. I sure did. Yeah. This guy can handle.
Questionable spot. It might be a watch list position for
Snow.
Bulls and Bears, but the level that we've pushed into at 155 has been resistance, and I think given the failure there today is going to give Bears a little bit further encouragement.
All right, that might have been an unintended pun there, watch list connection on the watch list. Thank you, Kevin. That's Kevin Horner, Senior Manager, Trading Services, Charles Schwab. Coming up, our panel's on standby to take a closer look at the nuclear energy space after Constellation Energy's latest quarterly report. How big will nuclear play in the continued data center build-out? Got that
D-Dog. Snowflake stock rallies on Datadog. Frontier's strong first quarter results.
I'm Marley. Chicago. We're tracking market movers, earnings reactions, and what traders are watching next. Stream
God, look at Datadog. Wow.
Intern, this place is incredible.
That's nuts.
Get all your office supplies. Your golf
In
balls.
1 month.
Your fancy coffee. Your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now.
Coffee should be here soon.
Invest your way with Schwab. Live from Chicago, this is Trading 360. I'm Marley Caden. We track macro forces, market trends, and company news that shape investor decisions, all with expert analysis and actionable context, from inflation data to sectors to policy. It's a comprehensive view of the market every trading day. Trading 360, in-depth market coverage straight from Chicago. Weekdays at 11 a.m. Eastern on Schwab Network.
Mom, when my grandparents moved here, did they know what our family would become?
I don't even know if they could envision it, to leave everything behind, literally come across the entire world. I think that we totally met what their wishes were. Schwab has been with us for almost 25 years through purchasing up houses, opening up our business, having children. They've always been there for us.
I want to invest with a company that can help me give my family a happy financial future.
Real-time market moves, earnings breakdowns, and trade-ready insights. Follow me on X at Sam_Vardas and connect with me on LinkedIn or Instagram for more. Welcome back to the watch list in Banking Hall. Constellation Energy trading lower to start the week despite a better-than-expected earnings report and reaffirming guidance. For more on Constellation Energy and the nuclear energy space, we want to bring in our watch list panel. Joining us today, Mish Schneider, Chief Strategist at MarketGauge.com, and Joe Rinaldi, President and Chief Investment Officer at Quantum Financial Advisors. It's good to see both of you. Mish, I want to start out with you and your thoughts on Constellation Energy. Beat on results. It's riding this AI demand power story. What gives in terms of the share reaction?
Well, believe it or not, it is interest rate sensitive, and that's one of the factors with the expectation for now for interest rates to stay high, possibly go higher. That's having some impact. And also what's having impact is a lot of that move in nuclear had happened earlier and now has already been priced in. So people are looking out in the future, but because of the earnings expectations not being accelerated like some of the other areas that we've been seeing in the market, there's been investor disappointment. But from a long-term picture, we cannot deny that there will be a move back into nuclear at some point. It's just a matter of when do investors get excited again.
Joe, your take on Constellation Energy first.
She's spot on with her comments long term. It is slightly overpriced with a PE of 40 currently, but I'm enamored with the stock right now. I'd be a big buyer. If you just look at the trend towards clean energy, they are the only utility that has a numerous amount of tools in their toolbox, i.e. natural gas, nuclear, etc., and that offers their product to 10% of the USA population. 10%, that's huge. In addition, if you also look at their expectation for earnings to be around 11 a share, they say 11 to 12, let's say 11. And if you look at the current PE of 40, you're looking at a $400 plus stock in the future. So our intrinsic value on the company is 350 to 360. That's where we mentioned the intrinsic value to be at current interest rate levels. And we reiterated that last time we were on your show, and we're saying the same thing. Our target price is between 350 and 360 by year end.
Joe, just a quick follow-up before I go back to Mish. What gets it there? You mentioned that $400 level that you're looking for. What's the catalyst that bridges the gap between where it is now and where you see it going?
Just additional increases to meet their target earnings potential, which they announced that they're spot on to reach this year, of $11 to $12 a share.
Okay, Mish, let me take it over to you. So you mentioned the interest rate sensitivity there, so you're probably not surprised then about its performance so far this year. Do you see any potential breakout for Constellation Energy?
I do, but I want to put a little bit of context to what Joe said from a technical standpoint, and partly also because of the fundamentals that are really driving the re-examination of nuclear, which of course is these elevated oil prices. They're still being perceived as somewhat stable, and that could actually wind up being, not right now a headwind, but turn into a tailwind if of course the oil prices continue to go up. We're not at critical levels yet. But let's look at the chart. If we look at the chart that you have up right now, it's kind of toppy. So I agree that it could go, especially if it gets over 350, much, much higher. But at this point, we're smack dab in the middle of a range between 250 and 350. And so I think it would be a harder trade right now to time your way in. The other thing I want to mention is there is a real big move in terms of nuclear energy into the small modular reactor.
CEG.
And that's the growth cycle that's been the strongest in decades. And right now what we're seeing there is also a lot of pressure. There actually is a stock called SMR, and that has been even worse in terms of the technical that we're seeing in Constellation. So I would watch that as well as a third indicator. If it gets over 11, it starts to get more interesting.
Okay, and then Joe, I want to go back to you. When you think about the story of nuclear versus natural gas, does nuclear risk losing some market share in the near term, especially when you think about the length of time to build out on nuclear?
Well, there's a positive to this. The modular space does not take too long. We were on your show back in November and I believe March, and we're pounding the table on BWXT technology in that modular space. We love the business, we love the model, and it may take about a year to get modulars installed and set up, but now is a great buying opportunity. It just came off the 220, 225 level, and we think it's a great buy going forward. And our intrinsic value is roughly 250 to 265, where the 10 years around 445.
Mish, your thoughts on nuclear and its build-out expectation?
It's definitely coming. There's no doubt about it. Obviously, we have regulatory issues as well that you have to throw in there. There's political situations, permitting gets into the mix. But the cycle is coming, and you know, speaking with Joe, who's long-term bullish, you know, I'm more into the market timing on the near term. I would want to see a little bit of a turnaround, especially given that the market has been so strong, and it's not necessarily following
these poly market and Kalshi, they're really blowing up right now, but I think along with that is the concern, right? As I travel through the state, hearing from folks who are worried about insiders really cashing in on political events.
Why weren't they concerned when Nancy made almost $300 million in 4 years under Biden's watch? You tell me. Obama, I remember when he came out as president, one of the first things he did was talk about Congress and investing in the market. I wish I still had that speech. He said he wasn't going to allow it under his watch. And then when Biden was his puppet, well, they went berserk with this Ukraine war and this energy, this green so-called war on energy. And I remember Nancy Pelosi's family being involved in Solyndra. And that was $600 million lost in a year. I mean, I've seen times a whole lot worse. A lot worse. A lot worse. I don't even know if I can spell it right. Nancy Pelosi. Solyndra, S-L-Y-R. The claim of former White House Senator conflicting accounts regarding security failures during the 2006-2021. No, that ain't it. There it is, solar plant. Nancy Pelosi was not directly involved in the management and financing of the Solyndra solar plant, but the company operated in her home state and employed a lobby firm that included the former top aide of hers. Solyndra received $535 million federal loan guarantee. I still think her top aide, Ron Pelosi's connection to Tonopah Solar Energy. $2010. So the leaders of it, the Fifth Amendment rights. This was Valerie Jarrett. So Jarrett was involved too. And she was the chick that was involved with Iran, giving Iran all them billions. McBee got consulting firm got $340,000. This was just a whole scam. Tesla's pulling back. What's the SPX here? We got the 200 with a double bottom on /ES. One more knife. We could stop here at Head and Shoulders. So YouTubers, I've been watching the /ES a lot closer when I'm trading the SPX and the SPY. Then on the SPY chart, I got the VWAP set up. VWAP, 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 VWAP. And if you're trading a SPY, you need to go out the next day. And then during they got a big the market tanked when Obama was in office, down 50%. So they come up with a bill for the shovel ready projects. They were supposed to be working on the highways and the byways and all that stuff, but it ended up going to the unions. General Motors was at 50 cents a share. Ford was at $1. General Motors went bankrupt. So they got a big loan. I don't even know if they had to pay it back. Millions and millions of dollars to help save their unions. All the same time, in the same breath, they were at war with gas and energy. And gas jumped to like $5 a gallon. And just like what happened under Biden, they opened the doors for the Middle East to start opening up their spigots. Then Obama flew millions of dollars over in a plane to Iran so they could build bombs. Same thing happened under Biden's watch, but it was a lot more money. It was like $250 billion by the time they let them open up the spigots again. That was only in 4 years. And then we had what you call the Arab Spring. Okay, get ready. Coming to our first support. And I think I just triggered it. My alert. Well, I didn't put one on SPX. So all that, I can't remember how many millions it was for the shovel-ready projects, but that all went straight to the unions. Oh, there's my alert. It said the Head and Shoulders and then this. So we'll just be patient. Actually, I should bring it up to right about there. Because that'll be another Head and Shoulders right there. Straight across. I was new to trading back then, so I was watching this all go down. There, just got triggered one of my alerts. Spy. Get ready. SPX is about ready to do it. So the SPXs are at 135, the 74.24s, 25s. And 35, 125 now. Damn it. I really want it right here bad. $110 or $115. I can get $115. There, got it. $115. $135 and $115. That's it. 5 each. Remember Bank of America being down at 5. And it was around 20. And then there's another one that was a energy play. I can't remember that ticker. But it went from $4 to $100 in a few months. I can't remember what it was. And then later it took off. Well, my SPX is my /ES is about hit support. I don't know why it didn't trigger. It should have triggered, but maybe just a penny off, a few cents. So I got 135 and 115. No. Triggered. That's not what I wanted to see. There we're at the 200. That's what I want to see. But so we'll see. I should buy another 10. Now give me 20. Not good. SPY triggered my second support. Well, all of a sudden I jumped down 4 notches. I don't like that. Always clean this Jim. We're at the VWAP on the /ES. It says do or die right here. Might have to get out of it if this doesn't hold. Okay. Ooh. Knife. I think I got 8 up on this one. Yeah. I think it's time to get out. Take the loss. Or try to build it up and get out. Yep. This one's a dadding. So now I have 30 contracts. Kumbaya, my lord. Kumbaya. Kumbaya, my lord. Kumbaya. There we go. Just a little bit more. I should get out now because I'm hitting the 9. That way it won't be a bad loss. $0.65. Come on, give me just a little bit. I think GM had 3 bailouts in its lifetime. And I believe they have fuzzy math too. I've always believed that. And it for years sat at 32 to 40, and then finally it broke out this year, a little bit of last year. It's an institutional buy. That's a fact. Yeah, I think it was 3 bailouts General Motors got altogether. General Motors, massive federal bailout totaling $50 billion in 2008 and 9. They got $50 billion structured through Bush and Obama administrations. TARP. TARP. Back to 60 on my calls. Well, they did not take it off, I hope.
A lot for those jumbo mortgages.
I remember
compared to
this.
What you would pay for a conventional mortgage right now. Why do you think that is?
It's very hard for me to focus on what you just said because I got that TARP song from that previous segment still playing. So, 2, 3, 4.
Well, I am just a poor boy from the streets of Tennessee. Work real hard to pay my bills. It's too much for me. Lost my job, they took my home. I'm down on my knees. Heard about this place where money grows on trees. I want some TARP. They're giving money away for free. I want some TARP. Save a little bit for me. Boston to Seattle, across this great big land. Tuck your head between the knees and take it like a man. Well, packing my belongings off to Washington, D.C. They're putting money left and right on a stack for me. Got an idea that just might work, what they gave the companies. Give everyone a brand new car, insured by AIG.
Want some TARP?
They're giving money away for free. I want some TARP. Save a little bit for me. LA to Miami, across this great big land. Tuck your head between your knees and take it like a man. Hey, what's with all these bonuses they're giving to the rich? They're filling up their pockets, walking away without a hitch. Gotta grab myself some TARP, 'cause I hear it's going fast. Now I know why they call it Fanny, 'cause reds are up there, as I was saying. I want some TARP. They're giving money away for free. I want some TARP. Save a little bit
They for me on some TARP.
to Chicago, across this great big land. Tuck your head between the knees and
Take it like a man. Yeehaw!
I want some TARP. I want some TARP. They're giving
Money, wait for me, I want some TARP. Little bit for me, I want some TARP. Wait for me, I want some TARP. Wait for me, some TARP. I want some TARP. I want some TARP. Yeah.
30 seconds. In the meantime, once again, we thank viewer Bill Zucker for composing and singing and sending us I Want Some TARP.
Incredible song.
We'll see you tomorrow.
fast. Now I know why they call it Fanny, 'cause reds are
Up her ass. So yeah, I've seen days a whole lot worse. Them times back then was real bad during the Obama crash. And everybody's joking around, having a good time. Then all of a sudden they started going into panic mode. when we went from 12,000 to 6,000, 6,500. It's got to stop. It's got to stop. They're screaming, it's got to stop. That's when all the socialism started. And Bush created it. I got, I think, 3 bailout checks after 9/11. I bought my first computer with it. Or a computer. A gateway. That's when I decided to start trading money. So thank you, George Bush. And thank you, Al Gore, for inventing the internet. Well, I lost a little bit of money on that one, but not much. I want some tarp. There's a chicken company that went bankrupt. I can't remember that one either. But it filed BK and then all of a sudden went from 7 or 20 cents all the way to $5. That was probably my 4th trade. So when we had this little 10% pullback, that was nothing. Nothing compared to what I've seen in the past. Nine to 10% is just a healthy correction. It's not nothing to worry about. 20%, and then we had a 30% pullback under Biden. And that was kind of worrisome, but it didn't bother me none because I've seen days a whole lot worse than that, than 22. And I wasn't really watching it during the Kuwait War. Maybe I would have had something under Bill Clinton. Like the one we just had? Or back then? Back then I was learning. Back then I was just learning. In 2008, 2007. So I sat and watched it until we hit 6,500 and then they're screaming. I mean, these guys, Jim Cramer, another guy, they were just begging for the selling to stop. And 50% pullback. So that's when I said, wow, 50% pullback. And I was watching these stocks. This is Hog was at under $10. Harley and Buffett bought. So when Buffett started buying the stocks, that's when I started paying attention. Because Buffett made a lot of money under Obama. He tripled his income. And then he tripled it, and then he doubled it under Biden. Both crashes. So I think it was the Buffett coming out and buying Bank of America at $5, and started buying the banks and started going back into that housing. And at that time, we had a big fire, and I was going to buy some. There was a stock out there that wood was fire resistant, where it wouldn't hardly burn. They put some kind of coating on it, and the wood wouldn't burn, so they were going to. I bought some of that and ran that up a little bit, about 500%, because of the big fires that were going on. But Buffett, I think, was the one that, now I wouldn't pay no mind to Buffett. Back then I would have, because I didn't know nothing about him, and I didn't know how he traded. I just heard he was the best trader, and he was buying all these stocks up. But now, there's no way I'd trade like him. Not in these days. I mean, he's cash. They were talking, the new CEO was talking about oil going to $200 a barrel, and I'm going, what? Are you people nuts? Just here in that last 10% pullback we had, there's no way I was going to believe that. I think Buffett was my indicator back then. Stocks were a lot more down than 50%. I mean, they were down 95, 85%. All these realty stocks, the home building stocks that he invested in. And I mean, he made a ton of money. That's where he got rich. He traded for years and was worth, petty compared to what he made back then. So it's like twice now he's done that. And he's waiting for another crash so he can do it again. And it could be 2 or 3 years before it happens. But he was heavy into real estate. Anything that would build a house, siding. Let's say we see a huge knife below the weekly 20. That would be just like a first support. The 21 would be a first support. And I'd buy then, in today's times. But I definitely, if you're looking at a yearly and a weekly, if we hit the 200, I'd buy it then. For example. I gotta see where my thonk is here. Tesla. God, what am I doing? The 20 would be like a first support. If that didn't hold, I'd be looking at the 50 and the 63. See here on the weekly, I would load the boat every time we hit the 200 EMA and SMA support back in 2011 when we had to pull back. See, Obama's first years were really bad. SPY went down to 67. Then we hit the 200 and it came down and finally broke the 200, and then the 200 became respectful. So if I was wanting to go long and I had my big day, when I got in down here off the 200, when I got back in 22 under the 200, that's when I started paying attention to the 200. But we had the 200 here, we had the 200 here. 2015 we had the 200. The 21 is just like a support. We had the 9 and the 21, the 21, the 21, the 21, the 21. So I'd trade the 21 until it broke down under the 21. Then if I ever saw it at the 200, that's when I'd load the boat. But 21 would keep you in the trade unless you weren't in the trade. And then I'd buy it at the 21. And the 9 keeps you in the trade. So if you're a swinger, you'd stay in the 9. And then the 21 would be your last resort, your last support. And then if that failed, boom, to the 50. But the 200 is where, if that ever happens again, we get close to the 200, that's where you want to load the boat. That's where I called this reversal out during Trump deranged syndrome on tariffs. Tariffs were never a big issue. They didn't turn out to be a big issue at all, but the market wanted to pull back because it was already up 40% under Biden 2 years in a row. And that was right after we had the Biden crash. Then he started printing all that money. And that was Ukraine war, Russia war. A lot worse sell-off than this was. This was back during Trump. The 200. And then the Obama crash. This is when I was learning. So I come right into the market perfectly. And I got me a $5,000 CD that's worth about almost 100 grand now. But definitely your 200. If we ever get down there again, that's a buy signal. Things won't get too bad. Unless we had what happened during, the reason they blamed real estate. And it was a good excuse because they were giving loans out to people that couldn't afford them, trying to share the wealth. People that just didn't have jobs, they were giving people on welfare were buying houses that couldn't afford them. And then you got Obama came in and all he could say was Wall Street sucked for constant 2 years. And then even after that he kept saying it until he started bailing them out. Somebody had to talk with him. Man, you got to lighten up. You're killing us. And back then, the market was mixed with conservatives and liberals. So they're, but now it's mostly liberals that are the billionaires that are in charge of the market. But here we had a good mixture. And then they all died off, and 2022, people were really freaking out back then, and I said, man, I've seen days a whole lot worse than what I even saw under Biden's watch. And that was a huge pullback. we were almost at $500, and we dipped all the way down to $347, about a 30% correction. 35, and it was stair stepping down. My calendar option's still up. And then when we hit that 200 during the Trump deranged syndrome on tariffs, I think that was just man-made right there. Because I wasn't seeing a big issue with it. Then Iran war, and I forgot that was this was probably Kuwait. Then we had a correction on 911. Into the Bush years. That was a pretty good correction too. But it seemed like it happened a lot, the recovery happened a lot faster. After about 3 months of unity. That's the closest I ever seen the country together, back after 9/11. I think Trump and a few others were the only one against that war, the Iraq war. SOLX. Let's go to the monthly. Huh. Something ain't making sense about that. It's a pretty big drop. Oh, SOXL. God. Woo! 2019. $2,020. Yeah, 2019 during the Clinton years. Or no, Trump. And then under Biden. It happened a couple times under his watch. Triple top. Well, it's a rocket. Semiconductors. AI. The AI Trump revolution. That's nuts. That looks like behind the behind the business doors. Let's pile up on SOXL. Nobody knows anything about it. Semiconductor Bull 3X. Wonder what the bear is on that one. You know what the bear is? SOXS. Oh gosh, look at that. That's the one I'd want to go in. That or short the other one. $237, as Jim talks about his history. I'm about burned out today. I'm done. Yeah, I remember when what was that guy that was the leader of Iraq? Hussein? Obama might have been his son. Hussein Obama. Barack Hussein Obama. I lost 3 real close friends because of that guy. Oh, I said to one of them, I said, well, if this guy is so much important on the environment, why is he flying that jet plane around every single frickin' day? We got the internet. He can just get on the internet and squawk what he needs. Boy. That's when I found the true colors of environmentalist. And back then, them planes were eating a lot more gas. A lot more polluted. I mean, this one guy I played music with for years. He wanted nothing to do with me anymore. Wow. I lost probably 5 close friends. One of my best friends, Kevin Rattery, who I hung with, and we did everything. And Jim, you gonna vote for Brock? I said, oh, I don't know. I don't think I'm going to. Well, he got mad and stomped his feet. I said, God, what's wrong with this guy? I said, no, because I was just starting to learn stock market, and I didn't like what he was saying. I mean, every single speech telling people they couldn't go to Vegas. And him and I just took a trip to Vegas. SPX triple bottom. Crazy Eddie. I'll watch that here now. We've got a triple bottom SPX for end of day trade. The 74.10's at 105. There. It's all backwards. We could be way overbought. Due for another small correction. I'm seeing people going getting a little bit greedy. And the doubt that's on CNBC, like they missed the boat. I'll probably listen to Squawk Box in the morning. See how their attitude has changed. Ah, darn it, this thing ain't working either. Fannie and Freddie were cheap. That was a nice trade to take back during the Obama years. They had that gay guy that was in charge of housing. The weird looking dude. He had the big glasses. He was in charge of housing back during the Obama years. This guy was really weird. Can't remember his name. Let me type in gay. In charge of housing. Gay guy in charge of housing. No. Can't remember his name. Oh, I'm up. 115. What's his name? Barney Frank. 125. This guy was strange. $175, yay! I'm out. That was an easy $800. Anybody take that trade with Bobo? Barney Frank. Oh, we don't look good there. Probably died of AIDS.
Good afternoon, everyone. Hello. I wanted to thank everyone for coming today. In particular, I wanted to acknowledge Con Hurley, who's the director of our Morin Center for Banking and Financial Law, and his staff, Martin, Lorraine, and Shannon, for the program that they put together.
We're not so large that we have two Congress.
Thank you. I am flattered to be invited and eager to begin, in some cases continue, with our friends and others in the audience, an important dialogue. Let me cut right to it.
He was like a slob.
There is now, I believe, a consensus that we have to make some significant changes in the nature of financial regulation and the scope. There
Hello?
is understandably less.
This is a recorded
agreement
phone
on what it
call.
should be. But getting to the point where
This is a
people do
recorded
agree that
phone
we need
call to
some
predict
has been
fraud.
a major step, and I want to talk about that, and then talk about the directions that we.
This is a recorded
hope
phone
be
call
going.
to
And I
correct
noticed
fraud.
that, I guess the institute is banking and the law. Part of the problem, of course, has been the banking that was done outside the law, not in an illegal sense, but in a non-legal sense.
He was under a lot of heat. Fannie and Freddie at this time were cheap. And it all started with Carter and then Bill Clinton. Carter started it and then Bill Clinton made it worse. The housing crisis. That looks like that dude that talks funny. I'm gonna watch that one. Anybody take that trade with Bobo? Still stuck in the last one. Oh shit, Jesse. That ain't no good. But I'm going to watch the documentary after we get out of here. Long dated. I thought you were in the one that I had. Because that wouldn't be too good. 7425s. Well, I'm done. 8 more minutes left. Will I look outside the door and see coffee? Oak. 5 pounds. Oh, it's here. It's here, it's here, it's here. My coffee is here. Don't feel like 5 pounds. They didn't give me a sample. Five pounds of coffee. Medium roast. Coffee. It's here. It's here. Okay, full tab. Oh. Still feels warm. I'm gonna have me a cup. I'm getting a lot of calls today. Yeah, my share of calls today. I'm wondering what's going on. Coffee has 4 age-old enemies: heat, light, air, and moisture. The way coffee is stored is essential to keeping it fresh and ready to enjoy. I got coffee. It's mine. It's all mine.
Caribbean, that maybe investors think they're suffering from contagion worries, but you can't set aside the impact from soaring gas prices for the impact of inflation.
Oh,
In fact, Ross issued
fudge.
a warning that consumer discretionary is beginning to drag on the portfolios. We're seeing
It's
pressure
like
on
these
six
idiots
packs,
don't
gas
even
and
remember the
oil,
past.
your entertainment, they're down around 6%, 7% today. Declines for the online travel agencies. You've got Booking, Expedia, TripAdvisor. TripAdvisor is down more than 7% today. Lodging, airline.
Unpack today's session as we approach the clock.
I'm sorry, but I mean, CNBC is hard to listen to these days. They got all these rookies on there that's never been there before. £5 of coffee. Milk, notes of milk chocolate, almond, and creamy. Look at that breakout. Went to 220. Another falling wedge. If you can count to 3, you can trade with me. You see, does everybody get the concept of 3? If you can count to 4, you might make a little bit more. 1 bis, 2 bis, 3 bis. 1 bis, 2 bis, 3B, and then a wick is number 4. Boom! And I jumped in it at number 3 down here. It's cheap. A little bit higher than that because it went down more. I turned my head and man, I was even. I'm going, yay! Broke out and sold it. Falling wedge. I'm going to find out. See how easy chart patterns are? So I sat here and I yacked and I talked smack about the past, and I was just waiting for the pattern to form. Fallen wedge. Boom! Man, 5 pounds of coffee. I'm going to have me a cup. We'll see if it's as good as it tastes. I mean, looks, smells. It's got a chocolate note to it, see? It reminds me of Jamaica Blue Mountain coffee. And this is the best they had. Colombian single origin coffee, 100%. Notes of milk chocolate, almond, and creamy. Next one I'm going to get is going to be Blue Mountain Jamaica. That'll run me a little bit. I spent a lot of money on coffee. I love coffee. Now I'm only drinking like 2 cups a day. So, today was kind of a weird day. I didn't have my setup, so that was something that you always should have ready right when the bell rings, is your platform, trading platform up, and I didn't have mine up. I missed out on a real good 800% trade this morning. So I'm kind of, then once you get behind when you're not ahead of the game, and you sit there and you go, you're mauling yourself because you didn't have it set up, or I did. I mean, this one here alone, this double bottom, it was perfect. I'm telling you, the setup was perfect. We had 3 white soldiers, 3 white soldiers. Then this, I got in that one. But that's the way it is. And then we had the triple bottom. So we had a couple plays off this one. Triple bottom, boom. Then a triple bottom, boom. Chart patterns. Study them, learn them, and you'll become, I guarantee it, you'll become a lot better trader. A lot of people don't trade chart patterns. It amazes me. It really shocks me that people don't take time out and learn 12 to 16 patterns. And I'm going to tell you, I'm going to show you what they are. So if you want to copy it, paste it, and learn them. It's not hard. I mean, it didn't take me a month to figure out 16 chart patterns. Chart patterns. Continuation patterns. Those are the ones I use when I'm in a snake. And then your bearish patterns, ones I know when to get out. There are 4 simple patterns. A head and shoulders, a rising wedge, a double top, and a triple top. It's just the opposite for reversals. Inverse head and shoulders, falling wedge, double bottom, triple bottom. It's that simple. And they show up every single day. Almost on anything. Especially the SPY and the SPX. You only see these on the 1 minute time frame. You might see them on a 5 minute. But the more time you allow, you're going to be looking at candlesticks and moving averages. But on the 1 minute, they're easy to spot. nobody likes to trade to 1 minute. I've argued with so-called gurus that laugh at me for trading to 1 minute, and they don't have the accuracy I have. I'm in 2 or 3 trades before they even take one. Always. I've proved it. People use the 5 minute might get 1 trade a day, maybe 2. I'm getting 7 or 8. People just don't like trading to 1 minute. They don't have the patience, and I think it's once you understand these patterns, they're so easy to identify, and then you can verify them with your other time frames. 2 minute, you know, you probably won't see as many of the same kind of patterns on a 2 minute, but you'll see some. So I'm going to get out of here and relax. You got the 420 profit, yay. I'm going to enjoy it. See you later. Yep, that's what I said. No, it's not decaffeinated. I traded the SPX most of the day in Tesla. Thank you, Bobby. The name of the coffee is Columbia Organic Single Origin Coffee from the same farm, not mixed up, probably from the same trees. I'm going to have me a cup of it, and I'll tell you how it turns out tomorrow. So we'll see you later, YouTubers.